Welcome to the European Market Open, everyone, and happy Monday. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Investors brace for key US inflation data tomorrow. That's as hopes for a Fed pivot start to fade. The US shoots down a fourth flying object as tensions rise between Washington and Beijing. A Chinese news outlet says Beijing is preparing to down a UFO near a naval base. Plus, Bank of Portugal Governor Mario Centeno joins us live here in London for a conversation on the euro area economy, inflation and monetary policy.
Tom, it's all about U.S. inflation, actually, a little bit later this week, so that's probably what the markets will latch on to. Today, the focus, of course, is still on a couple of earnings. And you can see they're broadly gaining some 0.2%. The DAX futures was gaining 0.2%. It's now flat.
Yeah, it's that adjustment, as you say, to the inflation print. We're expecting tomorrow forecasts of 6.2% year on year out of the year. It's a step down from 6.5%. But if there is a hot print, of course, it's the expectation you're going to get a markup in terms of yields, lower for these equities. And of course, the context of last week was that the Nasdaq ended down by about 2.1%. European equities essentially ended flat. Right now, you've got the Spanish IBEX gaining 0.2%, the FTSE 100, of course, here in the UK, down 7 points. There's some pressure, certainly, across the basic resources space as well. We'll unpack for you when we go to the sectors in the next 25 minutes or so. Across asset, looking at what is happening then in terms of US futures again, with that 2.1% weekly close for the Nasdaq futures. Yields, don't forget, on the front end, the 2-year in the US, jumping about 20 basis points on the week again, as investors adjust to potentially the prospects of higher for longer from the Federal Reserve. 4.52 now at the front end on the 2-year. Not all the movement after the pricing that we saw last week. Future stateside pointing lower by 0.1%. Euro dollar at 106. Just gaining 0.1%. Iron ore, I wanted to bring this out and focus in on this because there's again reporting that maybe the inventory levels in China around some of these basic resources are higher than had been expected. Maybe that demand and the impulse of pulling some of these commodities into China softer than expected, and that is pressuring iron ore down 3% currently in the session, Fran.
Now let's get over to our Bloomberg MLive managing editor. He's Mark Cudmore. Mark, good morning. You're looking at central banks' balance sheet versus GDP.
Yes, good morning, Fran. I'm trying to explain why everyone's so excited about the BOJ. Not just me, it's all those macro punters out there. And here, as you said, is a chart, the 4 largest central banks in the world, and their size, their balance sheets relative to their own domestic GDP. This line, way up in the sky, above 120%, is the Bank of Japan. So its balance sheet is more than 120% of Japan's GDP. Then we've got the ECB about 60%, the Fed below 40%, and then the PBOC about 30%. What this means is the Bank of Japan is similarly as large as the PBOC in terms of total balance sheet under management. And that's why people really care about who the new governor is. It also means that the new governor has an immense task. The Bank of Japan owns more than 100% of certain issuances of bonds. That's because traders kind of basically have synthetic issuance space which they lend out to short certain sectors, which basically shows that the Bank of Japan has a very, very unique kind of task to try handling when the new governor comes in to unwind the QE that basically meant they bought lots of bonds, and their yield curve control that also forced them to buy a lot of bonds. The extra impact is not just the domestic economy, it's because the Bank of Japan owns many foreign assets around the world. So the ramifications of any change of policy from Japan will filter through the rest of the world.
All right, Bloomberg M-Live Managing Editor Mark Cudwell on the complexities facing the next BOJ governor and what it means, of course, for those international fund flows. Thank you very much indeed. Now, US CPI data due out tomorrow will be, of course, closely watched as hopes fade for a Federal Reserve pivot. Former Treasury Secretary Larry Summers says the market has become too complacent about inflation.
I think the Fed understands that it doesn't understand because no one can know the future with confidence, and I think that the Fed is determined to do what's necessary. That's certainly what I hope is the case in a substantially uncertain environment. I think the consensus has become substantially too complacent about inflation.
Well, joining us now is Credit Suisse EMEA Chief Investment Officer and Global Head of Economics and Research, Nanette Heschler-Feider. Nanette, thank you so much for joining us. It's going to be a big week as we look forward to US CPI. How would you position yourself ahead of that figure?
We are certainly continuing to be very cautious on equities. We find that at the moment there is a disconnect in valuations versus where interest rates by the Fed, but also by other central banks are going to be for the remainder of the year. Just as a reminder, last time Fed fund rates were at 4.75%, the S&P 500 had a forward PE of 15.3. Versus now still more than 18. We are overweight bonds. We think that any push up in response to upward surprises in inflation are going to give opportunities to investors to lock in interesting yields.
What would move you, Nanette, good morning, what would move you from your underweight equities call? What would be the catalyst?
I'd love to see the 10-year break-even inflation firmly in the 2% area, giving us confidence that the market is really seeing the Federal Reserve as credible in bringing back down long-term inflation expectations into the range of price stability. I'd also love to have an understanding of how earnings are going to continue developing, in particular in the course of Q1. These are important milestones, I believe, in terms of equities. And then I do see some selective opportunities already now in equities. For example, China equities, they are likely to continue to be supported by the reopening of China and how it's going to translate into earnings for that market in particular.
So, Nanette, overall, are we underestimating actually the big concerns in terms of margins for earnings, or do you think we could have, earnings from now on, if they don't get better, certainly they won't get worse?
I think there is a certain complacency in terms of how resilient actually corporate margins are going to be and how simply the earnings trends are going to evolve in the future. But what concerns me predominantly is that the market has been just focusing on deltas. For example, the fact that central banks are increasing interest rates by less than a month ago, 2 months ago, 3 months ago, that's a delta. But it doesn't really change the fact that we are going to have now a period ahead with much higher interest rates to start from the short term and go all through the yield curve into longer maturities. And that is just resetting valuation. So my key concern is on valuations.
Okay, Nanette, I know you've got a positive view in terms of Chinese equities. You flagged that for us. Just on the China story, a redhead crossing the terminal right now. China saying that US balloons trespassed over 10 times since January of 2022. Again, this is China's foreign ministry as part of its daily briefing. China saying that US balloons trespassed over 10 times since January 2022. The context, of course, is that over the weekend we had reports out of the paper, that is a news publication in China, suggesting that there was some kind of aerial device floating above Qingdao, which of course is a really important naval base for the US PLA, and that the Chinese were considering shooting that down. This is the redhead across the terminal now then, China pointing to what they say have been trespasses by US balloons over their territory since January of 2022. Which brings me to the geopolitical question, of course, Nanette, how you invest, how you have that exposure to Chinese equities, given the geopolitics and what time frame you're looking at? Is this a short-term ability for you to kind of take advantage of the reopening, but longer term you have to start to factor in geopolitics?
Oh, there is no question about the fact that geopolitical developments have become more tense than ever in the recent past, that we have to factor geopolitical risks also appropriately in investment decisions. And certainly, as far as China equities are concerned, I have to say this is a market that is a highly volatile market. It's a high beta market that does very well when there is hopes for growth. And so the focus of the last months has really been on rethinking growth thanks to the China reopening. But this is a market that we have to put into context with the high volatility it has. So it is certainly a tactical view that we are prepared to take for now, but we would also reassess really over a 3 to 6 months horizon as well. So generally speaking, I would say on China equities, we are managing that on a tactical basis.
But Nanette, can you infer from U.S. balloons trespassing on one territory and the other territory that the situation between the two countries is going to get much worse, and is that inflationary for the world? Geopolitical tensions are certainly keeping price levels at a higher level than in a world of globalization. That is very, very clear. As far as margins are therefore concerned, we should be taking any sign of tension rising between countries, and these are the two economic giants of the world, as very relevant. But for me, this has an impact predominantly on what inflation, energy prices are going to do in response. And therefore, it is also to be looked at from that angle in markets. I expect volatility on interest rates, and as a result, I also expect volatility in equities. Nanette, thanks so much. Nanette Heshler-Fidera, Credit Suisse's EMEA Chief Investment Officer and Global Head of Economics and Research. Coming up, mystery balloons, aliens probing our atmosphere. It's all quite confusing, so we'll bring you the latest as UFO fever grips Washington and the world. This is Bloomberg.
Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority. From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Welcome back to the Open. We are 13 minutes into the European trading day. You're actually seeing some gains now across the European benchmark of 0.2%. European equities essentially ending the week flat. US equities, though, down. NASDAQ ended down a little over 2%. The futures in the US are also pointing lower. Again, as investors obviously gear up for that CPI print out of the US tomorrow. Expectations, forecasts across the survey of 6.2% year on year. But that's the inflation. There's much more interesting stuff happening above the skies of China and the US, Fran.
Yes, U.S. forces have shot down 4 unidentified objects over North America in less than 2 weeks, and a third in as many days. Now, the latest object was taken down over Lake Huron in Michigan over the weekend. Within the last few minutes, China has also said U.S. balloons have trespassed over 10 times in the last year. It feels like it's the Wild West. We understand that actually the U.S. military had never shot down an American, as an object in American airspace, and then 4 in like as many days.
Yeah, and so the questions are, is this just because they've adjusted the radar surveillance so they're picking up more objects in the sky? But China coming out saying that, again, in the last few minutes, the redhead, US balloons have trespassed over 10 times since January 2022. And fascinating to hear a senior general in the US as well, not ruling out extraterritorials, or in fact, or aliens. I'm not getting my words out, but basically not ruling it out. So who knows what's going on? Bill Ferry is going to break it down for us.
Yeah, I'm not sure if they're UFOs or not. Let's get the latest with Bill Ferry. So, Bill, what more do we know at this point?
Well, we don't know very much about the last 3 objects the U.S. has shot down in recent days. The Pentagon has not been giving a lot of details. It's not attributing these things to any particular country. The U.S. and Canadian authorities have not found the wreckage of these 3 objects. So we really don't know. Were they balloons? Were they spy balloons? Were they some university's research project? We just don't know. And as you mentioned, the Chinese are now coming out and saying that 10 U.S. balloons, they're directly attributing it to the U.S., have floated over their territory in the last year or 2. So I think we're seeing that this back and forth is going to continue, even though the U.S. doesn't say that these latest objects were necessarily from China. We just don't know what they are.
Bill, what are lawmakers saying? What is the reaction from D.C.?
You've heard a lot of folks on the Republican side basically saying that they think this has been a sign of Joe Biden's weaker policy on China. They're saying they're still critical of the administration's decision to let that first balloon fly over the entirety of the continental U.S. But there is broad support for the U.S. taking swift action now. There's been support for the U.S. to ramp up sanctions on Chinese companies identified for being involved with this, and they're looking to see if they still want to know if any U.S. material has gone into the making of these aircraft, UFOs.
Right. So Bill, what could this actually mean for U.S.-China relations?
Well, I think we're really in a pause now. I mean, tensions were high until President Biden and President Xi Jinping met a few months ago in Bali. There were high expectations for Secretary Blinken's trip to Beijing just about a week ago that got canceled. I think things are going to be on hold until both sides have enough of a pause where they feel like they can get some of those talks back on schedule. Right now, it seems like there's a daily drip of news on balloon sightings in both countries, and I don't think we're going to have space to plan those meetings until we get a little bit of a break.
Yeah, until the balloon angst ebbs, and a lot more detail needed, of course. Bill Ferry, thank you very much indeed on the latest, of course, on that front, both from China and the US and the implications for that relationship. Let's get the business flash now with Laura Wright. Laura.
Thanks, Tom. Goldman Sachs CEO David Solomon is reported to have said he should have acted sooner to cut jobs. The FT says he told a private meeting that the layoffs would have been less drastic had he reacted when signs of a slowdown began to emerge in the second quarter of last year. Goldman is slashing 6.5% of its headcount, one of its largest rounds of job reductions ever. Bloomberg has learned that Gautam Adani's conglomerate has halved its revenue growth target and plans to hold off on new capital expenditure. We're told the growth target has been cut from 40% to between 15 and 20%. That's as the group looks to rebuild investor confidence after a massive sell-off in its shares and bonds. OPEC's top official is urging countries to invest much more in oil to meet the world's future energy needs. Haitham Al-Ghais, Secretary General of the Organization of Petroleum Exporting Countries, says climate policies need to be more balanced and fair, and policymakers need to look at the big picture. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Laura Wright. This is Bloomberg. Tom Bronstein.
Laura, thanks so much. Laura Wright in London. Coming up, Olaf Scholz's party crashes to a huge defeat in the Berlin elections. Well, we'll discuss what that means for the German Chancellor next. And this is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. Now, what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Wall Street prepares for the latest read on inflation.
There's a huge amount of uncertainty out there.
We're going to get some lumpy numbers.
Will annual rates continue to fall?
If we get a hotter print, how much does that really take some of the momentum out?
Instant reaction on Bloomberg Surveillance.
The data have come in stronger than expected.
Or are they literally making it up as they go?
Plus an exclusive interview with Richmond Fed President Thomas Barkin.
It just makes sense to steer more deliberately.
February 14th might have something to say about that.
Inflation in Focus, tomorrow on Bloomberg.
Welcome back to the Open. 22 minutes into the European trading day. Arguably a bit of a holding pattern across these markets ahead of that all-important CPI print out of the US tomorrow, of course. You're seeing modest gains of 0.2% across the benchmark. Yields up, but only modestly. The dollar is bid up 0.2%. Futures in the US pointing lower by about 0.1%, Fran.
Now, Chancellor Olaf Scholz's party has suffered its worst ever election result in Berlin, losing out to the CDU in the German capital. It's the first time that the Social Democrats have actually failed to win an election in the city since 1999. So from all of this, let's go straight to Bloomberg's Oliver Crook in Berlin. Ollie, good morning. So the outcome, of course, seen as a big triumph for the Christian Democrats. Does it automatically mean we get a CDU-led coalition?
So it doesn't automatically mean that we get a CDU-led coalition. They still have to do, in Germany, there's a lot of coalition negotiation, so that will take place. They get a first crack at forming a government, but, there's enough support for the other three that potentially that coalition still stays in order. But just to remind people the kind of conditions under which this election has taken place, is this was not a regularly scheduled election. It was a recall of an election that was court-ordered from 2021 because it was, among other things, took place on the same day as the Berlin Marathon, which created all kinds of logistical issues, so they threw it out. So the CDU gained 10% from this time versus the last time. Some support slipped for the SPD and the Greens. I mean, a lot of it came down to local issues. Housing is a major issue here in Berlin, but also the kind of New Year's Eve celebrations, which are famous in Berlin. They can get quite rowdy, but really got out of hand this year, and the CDU really capitalized on a law and order message that seemed to attract some of the vote, and the SPD perhaps a bit complacent in their campaigning.
So, Ollie, I guess the question is, to what extent can we extrapolate from the Berlin outcome more broadly across Germany for the implications for the SPD and Olaf Scholz?
So I think that's a question for a lot of people, and I think there are a couple grains of salt that you need to take this outcome with. But, so how much of it is idiosyncratic Berlin? How much of it is broader kind of German sentiment? For one thing, it's certainly a big symbolic victory for the CDU, which, as we've mentioned here, displaced the SPD for the first time since 1999. And that's after the CDU got their worst result ever back in 2021. Also dealing with the legacy of Merkel in the wake of the invasion of Ukraine and sort of exposing Germany's dependence on Russia for gas. And there's the bizarre nature of this election. First recall in modern German history, you look at the participation numbers, 63% versus 75%, so all those footnotes. But if you look at national polling more broadly, the CDU has really bounced back since that election and in throughout this year, up now in the poll of polls at 27% versus 20% of the SPD. So, a bit of a cautionary tale, but certainly getting attention from the SPD and Olaf Scholz this morning.
Oliver Crook on the ground in Berlin on that cautionary tale for the SPD. Thank you very much indeed. Let's check in now on what stocks are on the move with none other than Joe Easton from our equities team. Joe, what is in focus for you?
So we're starting off today looking at the UK home builder sector. They are dropping today. Here's Persimmon on the screen, down 1.8% after Deutsche Bank cuts that stock down to sell. And a couple of other peers like Taylor Wimpey and Redrow also downgraded at the bank. They are worried about those valuations coming up a bit too much as those interest rates worries ease. They say that rally is overdone and cut those stocks. Then I'm staying in the real estate space, but going over to Sweden. Castellum, one of Sweden's biggest real estate companies, announcing a $1 billion rights issue. That's hitting that stock quite hard. It was down around 8% earlier. It's now only down around 4%, but still one of the worst performers on the stock 600, given they need some extra cash to deal with those higher rates hitting the real estate sector. Then I'm coming back to the UK, but going into the tech space, an AIM-listed tech company we've got called Cape Technologies, up around 12%. The founder is going to buy that company for around 285 pence a share. He already owns about 50% of the company. He also owns Playtech and, interestingly, Camden Market. That stock trading above the offer price for Cape Technology over on AIM. The final one I'm looking for is Orpea. This is the French retirement company involved in a big scandal recently over some potential mismanagement of funds and also with their patient issues as well. Surging 25% today, though. They are reporting a massive jump in their earnings. Their quarterly revenue was up around 6% and their net sales up around 8%. Orpea up 25% in Paris.
Thank you so much for a terrific roundup. As always, our equities reporter, Joe Easton. Coming up, the Bank of Portugal Governor, Mário Centeno, joins us live here in the studio. We'll talk inflation. There's also a number of teacher strikes in Portugal, not happy with their pay and work conditions. So we'll talk about all of that shortly. This is Bloomberg.
the standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Nugent Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Investors brace for key U.S. inflation data tomorrow as hopes for a Fed pivot start to fade. The U.S. shoots down a fourth flying object as tensions rise between Washington and Beijing. A Chinese news outlet says Beijing is preparing to down a UFO near a naval base. Plus, Bank of Portugal Governor Mário Centeno joins us live here in London for a conversation on the euro area economy, inflation, of course, and monetary policy.
Okay, let's check in on these markets then, of course, as the focus remains on that CPI print, of course, out of the US tomorrow. You have some modest gains across the European benchmark, 0.2%, but arguably a bit of lack of conviction, of course, until that data comes through. The DAX is gaining 36 points, the FTSE 100 up 0.3%, despite some pressure on the basic resources space coming through from iron ore lower. Across the Asian benchmark, by the way, just to set you up in terms of the context, that benchmark ending close to a more than 1 month low, again, as markets readjust to the prospects of higher rates for longer. Across your sectors, top of the list, construction materials gaining 0.6%. You have 3 sectors in the red, real estate down by 0.7%. Across to your yields, you're seeing yields up modestly across debt, sovereign debt. Currently, you're looking at BTPs in Europe up 4 basis points on the 10-year, and gilts selling off as well. Yields dust up for about 3 basis points across the curve here in the UK. Fran.
Now, economists polled by Bloomberg say inflation in the Eurozone still will be above the European Central Bank's target in 2025. Headline and underlying measures are both seen averaging 2.1% in 2025, just above the ECB's target. Now, the poll shows core inflation peaking at its current level of 5.2% in the first quarter before easing to 3.6% in the final 3 months of the year. Well, we are delighted to be joined now by the Bank of Portugal Governor Mário Centeno. Mário, thank you so much for coming in, first of all, but you have these inflation numbers really tattooed to your brain. I mean, you look at it, you know, if not minute by minute, certainly daily. You've said that actually there's a warranted 50 basis points hikes in March. Is there anything that would make you change your mind, that would derail that?
Well, thank you for having me. We declared our intention in March to hike 50 basis points. We will have a new forecast. It's going to be very important for the continuation of monetary policy by the ECB. We need to be open-minded with data because we stated that. We will decide meeting by meeting and being data-dependent. We have inflation going down. Right. Actually faster than we expected in December when we produced the previous forecast. It will continue to go down as long as we don't have further shocks in our economies. So this is good. This is, of course, the result of monetary policy.
Governor, where we are now, you see a 50 basis point hike in March and then maybe stabilization for a bit?
This is the intention. The first part of your sentence is the intention already declared by the ECB. The Governing Council stated that in the last meeting already in February. After that, we will need to see the data. We need to be open to all possibilities, I would say, because that's what is most important for us, is that inflation keeps going down. We have good signs of that recently. The inflation surprised us in the downside for the first time in many, many years. That's great for Europe. We need to continue that way. And hopefully we can be more predictable as long as this trajectory of inflation is set.
Governor, what would you need to see to have a step down to 25 basis points? What are you looking for to make that move lower?
Well, you know, we never had the anchoring of expectations of inflation in the medium term in the euro area, contrary, for example, to the US. That's very good for us. We really need to see inflation converging to 2% in the medium term. And the medium term is 24-25. If we are close enough to that target in our forecast, we can certainly pose this process of hiking. But let me be quite precise. What is important to everyone when they look at the monetary policy of the ECB is that if our interest rate needs to converge at some point to what we call the neutral rate. And we will do it because that's the nominal anchor that we need in monetary policy. And I think we have it in sight.
So what is, given what you're looking at now, what would you expect the terminal rate to be to get inflation back down to that 2% target? Does 325 feel appropriate, 350?
My expectation is that March will be very important to define exactly that moment, because the new forecast is going to tell us exactly where we are in this process, and we, for sure, are much closer to that terminal rate than before. We are approaching it, and I think March will be a great moment for us to be very clear about it.
Governor, meaning what exactly? That in March you'll be able to say whether you stop hiking rates and you're in a bit of a wait-and-see situation over the summer, or whether you have to be more aggressive? Give us an indication of how you look at the new forecast and what that specifically means for monetary policy.
There's a huge probability, or at least a significant probability, that we can be as clear as you just stated in March. It is dependent, nevertheless, on the forecast. So let's stay short of saying something as definite as that. But the possibility exists for us to do that.
Governor, what does your gut feeling tell you that the forecast will be, given what we know so far?
If we take on board all the good numbers on inflation and the reduction in international markets prices, oil, gas, commodities, we can take the expectation, we can have the expectation of a faster and lower level of inflation throughout the horizon of our forecast. It is quite important, though, to keep us very straight on this strategy of being very fair with the data.
The labor market remains very tight in the Eurozone, as it is in the US. To what extent is that a blockage on the transmission mechanism of monetary policy?
Yes, it is true that the labor market has surprised us positively quite a bit all over Europe. That's very good. We don't see signs of second round effects on wages. Wages continue to evolve given the conditions at a very moderate pace in Europe, 3-4%, given what we have in terms of productivity gains, the recovery of the economy, the tight labor market. This is a labor market that is also surprising us in that front as well. And that's why I think we can be more assertive in terms of the future, because we don't see domestic pressures building up in Europe.
Because you have that resilience around the labour market. And when it comes to the hikes that have been pushed through by the ECB so far, what is the impact that you have seen across this economy?
Well, we certainly are tightening. This translates into consumers and to investment. We actually saw some deceleration of the economy at the end of the year, but I am not really worried about it because we are at a very good condition in terms of the business cycle. We are at the top of the business cycle, so we can expect some deceleration of the economy. What I think it's more important, it's the resilience that our economy is showing, certainly with the labor market as well, but the buffers that consumers built during the COVID period are helping us quite a bit.
But Governor, when you talk about a slowdown in growth momentum and the slowdown in inflation, how much of that is a direct monetary policy effect, that actually what you're doing is working?
I don't want to overstate it, but because monetary policy works with a lag, everyone knows that. We should be worried about that point because we hike quite a bit in a very short period of time, so we can expect also the economy to react strong when that moment comes. I think the mitigating factors have been the buffers that I just mentioned, the world economy also reacting positively, China coming back, if only partially, to the global economy. Those factors have helped us in the process, but the tightening is there, and it is making its way.
Governor, when you look at the repayment for long-term loans, QT and TLTROs, how much does that actually impact monetary tightening?
It is important to keep reducing the balance sheet of the ECB, and the natural way to start was precisely with the TLTROs. It is helping the transmission mechanism in monetary policy. We don't have any doubt about it. That was exactly the reason why we changed the conditions for these mechanisms back in November. But this is all this works with a lag. We should not be impatient, and we should be prepared to steer monetary policy, also having in mind the amount of tightening that we already introduced in the euro area.
Governor, thank you very much indeed. Really appreciate your time this morning and fielding a number of questions, of course, on monetary policy at the ECB. Bank of Portugal Governor Mario Centeno, thank you. Now, coming up, Goldman's CEO is reported to have told colleagues he should have acted sooner in terms of job cuts. We will get more on that story next. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? Mm-hmm. So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019, say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah.
So what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
News breaks. No one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
Welcome back to the Open, everyone. 43 minutes into the European trading day. Actually, an important week coming up ahead. We have U.S. CPI tomorrow. Stocks pretty much muted. Again, it's all about inflation, of course, some of the anxiousness that we've seen with inflation, and whether we have that number tomorrow really confirming that the battle with inflation is not over.
Okay, let's switch focus now and get the latest from Turkey. Authorities there have widened an investigation into contractors after many buildings collapsed during the earthquakes last week. Activists have accused the government of destroying related evidence, which the government denies. Nearly 35,000 people have been confirmed dead in the country and neighboring Syria. Joining us now is Bloomberg's Simin Demirkan in Istanbul, and from Ankara, Selva Bahar Baziki from Bloomberg Economics. Simin, let's start with you and the latest in terms of the humanitarian crisis unfolding in Turkey and Syria.
Yeah, it's been called the worst disaster in a century. As you said, in total, 35,000 people reported dead on the Syrian and Turkish side, 30,000 of them coming from Turkey, with 80,000 reportedly injured, and of course, thousands still missing. Now, relief efforts, rescue teams are still on the ground there, but even though it's few and far between, people are still being pulled out of the rubble alive. Dozens of international rescue teams came to Turkey to help, but slowly, one by one, they seem to be returning home.
And Selva, what does this mean on the economic front?
It's an immense humanitarian disaster, and that's what we're focused on right now. There's still lives to be hopefully saved. But we've calculated what the potential fiscal impact might be on the government budget. And we've looked at a previous case, an earthquake by the magnitude of 7.2 in the province of Van from 2011. The government spending there had to be adjusted, obviously, for the current situation at hand. We've scaled it with the relative magnitudes of the hit, as well as the economic size of the immediate provinces surrounding the epicenter. So that gives us a number of 2.6% of GDP in the short run. And if we were to include the rebuilding, which obviously takes a longer time, then that would go up as much as 5.5% of GDP. We've only considered the two immediate provinces next to the epicenter, as I said, but the impact is much larger. It spans an area of 10 provinces. We also expect the government to introduce treasury-backed credit schemes targeting these 10 provinces. So the estimate might be a little higher than what we've calculated. Having said that, I should underline there's still many questions as to what the infrastructure is that needs to be replaced, as well as the terrain and the state of the buildings that might make a difference in the number.
Okay, so that is the economic cost. Simin, is there a political cost for Erdogan?
Yeah, as the death toll rises, so does anger towards President Erdogan's government. Survivors and opposition party leaders are saying that the government was just too slow in reacting and ill-equipped, especially on the first day, missing a key opportunity window where they could have possibly saved more people. And of course, shoddy construction is also being blamed, leading to more deaths. Now, more than 100 contractors are being investigated, and 3 have actually been arrested. Now, some critics say on paper, construction codes meet earthquake engineering standards. However, in reality, they're barely enforced. And with elections potentially months away, this could hurt President Erdogan's popularity. And of course, he's been the leader in power for more than 2 decades.
And Selva, of course, on the other front, what do we know about international aid? And can the government deal with the economic cost to make sure that people are taken care of?
That's actually a really timely question. We've seen reports of international aid coming in, but it's unclear whether that will be put to the use of the government as the treasury side or to the specific provinces and the local governments there. So once that's clear, we will see how much of the pressure it will alleviate from the government budget. I should add that the unorthodox policy approach of the current government to bringing down high inflation down with a lower monetary policy rate, that really is causing a lot of trouble on the economic side. In fact, contrary to what the program is trying to achieve, inflation was at a 24-year peak last year at 85%. The currency has lost value by 29% over the year, second only to Argentina among peer emerging economies. And that comes despite the central bank's interventions into the currency market, which we at Bloomberg Economics calculate at $108 billion for the entire year. So yes, the cost will be large on the budget. The central government will definitely breach its target, but that's really is coming at a point where the current government fiscal side is quite strong to begin with, and the problems are exacerbated by the unorthodox policy approach, actually.
All right, thank you both, of course, for this important update on Turkey and Syria. Bloomberg's Simin Demirkan and Selva Baziki joining us.
Okay, let's check in on how these markets are setting themselves up then this Monday morning, 50 minutes into the European trading session. You are seeing modest gains of 0.3%. Futures in the US range bound. There is plenty more coming up. Stay with us. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. We are 53 minutes into your European trading day. A bit of a lack of conviction ahead of the CPI print out of the US. Gains of 0.3% nonetheless across the European benchmark. Futures just edging lower in the US. We do have a couple of lines crossing from Professor Jonathan Haskell, a member of the BOE's MPC, just on the costs of Brexit. He's been giving an interview saying the Brexit cost is £1,000 per UK household in lost output, and that Brexit cut trade 10 to 15% below usual levels. Just a couple of lines there from the MPC member Haskell on the costs of Brexit.
Now on to banks, and Goldman Sachs Chief Executive David Solomon said he should have followed his instincts and cut jobs sooner. That's according to a report from the Financial Times. Now last month, the bank actually began a plan to eliminate about 3,200 positions, the biggest round of job cuts ever. Well, joining us now is Bloomberg's Tom Metcalf. Tom, so first of all, good morning. I mean, this is quite confusing for me because it's quite rare to have like a mea culpa from a top Wall Street banker. But is he regretting it, or he says he had the right instinct? I'm not sure whether he's justifying why he delayed it.
Yeah, it's an interesting sort of mea culpa, as you say. Look, he's talking to his sort of about 400 partners at Goldman, so I think it's understandable they bring up, you know, probably the biggest strategic shift ever. But yeah, no, I think he's saying, look, we should have cut faster and sort of sooner. And you can imagine that kind of playing quite well with Goldman people, you know, like make these decisive decisions. And for me, it's interesting what it says about Solomon as well, right? He's probably out there feeling a little bit vulnerable and trying to kind of get his case across.
Interesting. So do we expect, given that vulnerability, do we expect more to come out with this? He had this partner meeting, I think 400 partners in Florida. Is there anything else that's going to come out from that meeting?
Yeah, so it's running for a few days, so sort of all eyes, hopefully we'll pick up some stuff. But you would think what they're going to talk about is, obviously, hey, are more job cuts needed, for instance? What's the outlook? And of course, you know, Goldman's an absolute giant in the Wall Street, you know, the classic Wall Street stuff of investment banking, trading. And will there be some maybe more of a pivot towards that? You know, will there be sort of even more of a sort of retreat from this idea of, hey, we can be kind of more of a almost retail bank?
But is he safe at the moment?
Yeah, oh no, look, I think so. I think, you know, there's no sort of obvious candidate kind of coming up. There's no sort of, I think, sense that there's sort of immediate change coming. But, you know, it's a tough environment up there, and I'm sure it's going to be quite a sort of stressful conversation or two with his other...
Tom, just we talked to you about this a lot, of course, in terms of the job cuts. But the data keeps coming through, the information keeps coming through. What is your sense right now of how much more there is to go, or whether, in fact, we're broadly done across the financial sector?
Look, all the executives are saying, look, we're largely done, we've right-sized, we're looking good. I just get the sense, you know, if the economy does worsen, you're going to see more cuts. Because, I mean, these banks grew so much over the pandemic. We're not talking about them kind of sort of reducing their size in any significant way over 5 years. It's almost just going back to where you were 2 or even 1 year ago.
Tom?
Tom Metcalf, thank you very much indeed. Always on point, of course, with the latest when it comes to what is happening in the banking sector. Of course, Solomon, the reports there from the FT, that there was some regret that he didn't go earlier in terms of those job cuts, and he may have then had to reduce the headcount by a little bit less. Across these markets, gains of 0.3%, Francine, across the benchmark.
Yeah, European stocks are posting some of these modest gains. Interesting. I feel like it's all about CPI tomorrow to give us a gauge of whether the fight against inflation just needs to get more vigorous or whether we're almost there. So until then, maybe we're trading on the sidelines. Certainly we're range bound. Most also U.S. futures gaining some 0.2%.
Yeah, that all-important CPI print, is it going to throw a spanner in the works of your Valentine's Day plans? The expectation is you're going to get 6.2% year on year for the month of January. That is it for the European Market Open. Surveillance is up next. This is Bloomberg.
We have only 8% of the ocean protected today, and our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
DOJ or other authorities
could face bigger challenges next.
It was going to keep bringing World Cup.
This is a 3 as the economic picture does.
The BOK is getting ready to make a decision.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Investors brace for key U.S. inflation data tomorrow as hopes for a Fed pivot start to fade. Well, U.S. fighters down a fourth flying object as tensions rise between Washington and Beijing. A Chinese news outlet says authorities there are preparing to down a UFO near a naval base. Plus, the death toll in Turkey and Syria from last week's earthquakes approaches 35,000. A business group sees an $84 billion hit to the Turkish economy. Now, let's check on the markets. Of course, it's a big week when we have that CPI data out of the U.S. tomorrow. The U.S., of course, very much in focus to try and understand what that means in the fight against inflation. European stocks, for the moment, are actually posting some pretty modest gains. U.S. futures are retreating a touch again. Investors trying to position themselves ahead of that CPI data. Treasuries seem to be range-bound. We'll see, well, the U.S. two-year yield at 4.5323. Again, we did have a sell-off in U.S. government debt on Friday, and that pushed up the 10-year Treasury yield by 7 basis points. Overall, we're seeing they're small gains. They're gains, but, you know, small gains, 0.7% higher, 0.4% higher for the DAX. We're also getting some breaking news. EU is lowering the euro area 2023 inflation forecast to 5.6% versus 6.1%. It's raising its euro area growth forecast to 0.9% versus 0.3% prior. Now, I think we'll break it down for you so that you fully understand exactly what we're looking at. We also had a good conversation with the governor of the Central Bank of Portugal on inflation, what that means for that March. He says really that March meeting for the ECB is extremely important. Markets now pricing in a 50 basis point hike. Now, U.S. forces have shot down 4 unidentified objects over North America in less than 2 weeks and a third in as many days. The latest object was taken down over Lake Huron in Michigan over the weekend. And in the past hour, China has said U.S. balloons have trespassed more than 10 times since last year. Let's get the latest now with Bloomberg's Rebecca Chung-Wilkins. Rebecca, what we know is that U.S. military has never shot an object in U.S. space before. Now they've done 4 in 4 days. What does that tell us?
Absolutely. We are in somewhat uncharted territory here, and that is partly because it does seem like the surveillance and the use of this type of technology in particular has, for the most part, somewhat gone under the radar. China today, just within the last hour, saying that over the past year, since early 2022, the US has illegally flown at least 10 balloons over China, and so very much sort of putting it back onto the US. And we do know that that the US has sort of increased its spending in this sort of development, and at least the development of balloon technology over the last sort of couple of years.
So, Rebecca, what's the political response, right? How are lawmakers reacting to this? I know there's also talk about UFOs, which frankly we don't really know what to do with.
Certainly, I think the domestic pressures for both Xi Jinping and Biden are pretty clear here. I mean, Biden has faced some quite sort of robust pressure from Congress that to take action and to be quite sort of responsive. And in fact, I think, you know, the fact that we've seen the downing of 3 balloons or 3 unverified objects in 3 days is some ways sort of an indicator that this heightened sense of scrutiny that the Pentagon and the White House is under right now. More broadly, I think we will also start to see countries now responding publicly to this claim that the US has made that this is China's sort of surveillance balloon as part of a much bigger global program. And of course, on the UK, for example, we've seen the UK saying they're going to launch a review to look into whether there need to be changes in how the British assess that surveillance of their airspace too. So I think we can see the US sort of trying to use this transparency push to try and see if it can win support from partners and allies. So that's another thing to keep watching now.
So what could this mean for US-China relations going forward?
It certainly doesn't feel like we are anywhere close to reaching that floor, which, you know, feels like sort of months ago now. But when we were thinking about Biden, just a couple of weeks ago, was meant to be going to Beijing to try and normalize relations. Now, it's worth mentioning that so far, although China has sort of retained and reserved its right to retaliate, has been relatively muted so far. And we could still see potentially a Blinken trip. Blinken has only postponed that visit, but of course, if he does go, the window is shutting because we have the MPC conference coming up, and he will of course have to go with a much stronger message than typically we would have expected. So certainly no normalization in relations that we were hoping for as of yet.
Rebecca, thank you. Rebecca Chun-Wilkins for us from Hong Kong. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bloomberg has learned that Gautam Adani's conglomerate has halved its revenue growth target and plans to hold off on new capital expenditure. We're told the growth target has been cut from 40% to between 15 and 20%. That's as a group looks to rebuild investor confidence after a massive sell-off in its shares and also bonds. India's finance minister says the country is discussing ways to develop a standardized global framework for regulating cryptocurrencies. The talks with G20 members come as India holds the group's presidency this year, with crypto regulation and climate change likely to be among the key topics of discussion. India introduced heavy taxes on cryptocurrencies last year. And LG Chem says it's prioritizing efforts to secure raw materials used in EV batteries. In an exclusive interview, the CEO of the Korean energy giant told us the company is working on establishing a self-sufficient global supply chain.
We are preparing ourselves for the, first of all, secure supply of raw material, which is more important than the price. What if don't have material to produce? And the price becomes secondary. So our first and foremost priority is to secure enough raw material for the future.
Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thanks so much. Coming up, traders await the Valentine's Day U.S. CPI reading, but will it be heartache or heartbreak? We have more on that story next. This is Bloomberg.
Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
I think the Fed understands that it doesn't understand because no one can know the future with confidence, and I think that the Fed is determined to do what's necessary. That's certainly what I hope is the case in a substantially uncertain environment. I think the consensus has become substantially too complacent about inflation.
Well, that was a former Treasury Secretary Larry Summers saying that the market has just become too complacent about inflation. While staying on the inflation theme, U.S. CPI data due out tomorrow and will be closely watched as hopes fade for a Federal Reserve pivot. Now, for more on all of this, we're joined by Adam Cole, Chief Currency Strategist at RBC. Adam, good morning. A huge day tomorrow as the market tries to figure out whether the fight against inflation is being won or whether there's still a lot more to do. Where do you think we are?
So I think we're on the fence a little bit at the moment in that debate, and the consensus is for a fairly steep and sustained fall in inflation this year. And if anything, I think we see that as a little bit complacent at the moment. And the incoming data has a high information content, and that expectation may well be challenged in the coming months. So as I say, I think we're as in the dark as the Fed is and very sensitive to incoming information. For this week's data, I think the risk is fairly symmetric, that we would see a fairly sharp market reaction to an upside or a downside surprise on the core number in tomorrow's data.
Adam, what have you found so interesting so far, actually? I know we had some data that actually pointed to a much hotter economy than expected. I mean, how many quarters or how many months does it take to make a proper trend? And how volatile are you expecting the U.S. economy to be also because of COVID lags?
So more than 1 month's data for sure, of course. But I think another couple of months of employment data suggesting that trend is starting to pick up again. Not necessarily the 500,000 jobs that we saw in the January release, but anything that suggests the trend is picking up from where we thought it was, of perhaps 150 or 200,000, would again call into question the idea that we've seen, or we can see, the peak in policy rates, the peak in inflation, the bottom for the equity markets, etc., and all of those trades that hang on the peak in inflation being in place start to get called into question again. And again, I think that there is a strong consensus in the market that this year is the mirror image of last year being all about bonds and equities selling off together and the dollar rallying. Consensus this year is that bonds and equities rally together and the dollar sells off. And incoming data so far this year have challenged that view, and I think there's every reason to think that will remain the case for a few months.
So, Adam, the other, of course, big story, and I don't know whether for markets it's actually bigger than maybe the U.S. CPI print, is what's happening with the Bank of Japan, whoever comes after Governor Kuroda, how much will they be able to keep a lot of the speculators at bay? And what does that mean for yen?
So I think that's very much where the flow comes from in terms of the BOJ. And in the near term, at least, assuming Ueda is confirmed on the official announcement tomorrow, I think my recollection of Ueda when he was on the BOJ policy board back in the early 2000s is that he takes a very pragmatic view of things. He's very hard to pigeonhole as hawkish or dovish, much more practical, much more pragmatic view of the world. And I think he's not said a great deal for the decade that he's been in academia, and we need to look to his early comments, perhaps at confirmation hearings, for some more direction on that. But the key point for me, however, is that drives positioning outside Japan in terms of JGBs and dollar yen. The flow from within Japan is much more driven by the expectation for the Fed than the BOJ, where you have much more leverage in terms of Japanese investors' domestic flow. And on balance, I still think that flow is dollar yen positive in the longer term. So once we get through the next couple of weeks and the dust settles, I think that trend reasserts itself.
I mean, where does the dust settle to? So it's very clear that speculators think that, look, the BOJ's cap on government bond yields will eventually have to be scrapped. What if it wasn't so?
So I don't think JGB yields are that far from the equilibrium they'd be at if there were no yield curve control at the moment. If you look at JGB yields, the 10-year, the target rate, relative to other parts of the yield curve, or relative to other low-yielding markets internationally, the adjustment post the widening of the band in December, I think, took us most of the way to where JGB yields would be in the absence of yield curve control. So clearly we are ultimately on the road to that policy being adjusted or abandoned, but any additional upward pressure on JGB yields from here largely, I think, comes from a build-up of speculative positions outside Japan rather than an adjustment of the market to its natural equilibrium, because I think we're probably not far from there already.
Adam, I also want to ask you about the ECB and, of course, Euro. So we spoke to the central bank governor of, the Portuguese official, actually, on the ECB board, and he was saying, you know, the ECB must see inflation moving to 2% to slow hikes. Here he is.
It really needs to see inflation converging to 2% in the medium term. And the medium term is 24-25. If we are close enough to that target in our forecast, we can certainly pause this process of hiking. But let me be quite precise. What is important, our interest rate needs to converge at some point to what we call the neutral rate. And we will do it, because that's the nominal anchor that we need in monetary policy. And I think we have it in sight.
So that was Mario Centeno. Adam, do you expect ECB to lift, by 50 basis points in March?
Yes, we do. I think the debate really is where rates go beyond the March meeting. But for that meeting, the ECB's guidance has been very clear. And I think the hurdle is high for them not delivering the 50 basis point hike that they've set us up for. So yes, we're very much in that camp.
So what happens after next month? Some of the more hawkish members, already signal that actually more big hikes could be on the way. And where do you expect euro dollar to be by year end?
So I think, like the Fed, the ECB are very much data dependent. So it will depend on the incoming CPI data, incoming data on the lead indicators of inflation on the sort of policy relevant horizon. So what they see in the labour market and wage developments. If things come in as suggested by the ECB's latest staff forecasts, then we are close to the end of the hiking cycle with possibly one or two more moves beyond the March meeting, but close to the end of the cycle, as is the case for the Fed. As I say, I think the precise timing of the peak of the cycle is dependent on incoming data, which is where the ECB will be looking for direction.
Thank you so much for joining us. Adam Cole, Chief Currency Strategist there at RBC. Now, coming up, a slew of UK economic data is due this week. We'll also break down what that means and what to watch out for next. That's shortly, and this is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Well, we get UK wage and inflation data. This week, economists expect the readings will show consumer prices are still rising by more than 10% a year, backing the BOE's decision to continue to hike rates. Meanwhile, concerns are mounting about a wage price spiral in Britain. Well, here with us is, of course, our UK correspondent, Lizzie Burden. So, Lizzie, good morning. What can we expect from these two separate reports?
Well, Francine, we already had the GDP data on Friday showing that we dodged a recession in the UK, but these are the figures that will be the deciding factor for the Monetary Policy Committee before the Bank of England's March decision. So we get the jobs data tomorrow, expected to show the labour market is still tight. We've had a report overnight from the Chartered Institute of Personnel and Development showing that employers are expecting to raise pay at the fastest rate on record. If you're getting your annual review anytime soon, take note. And you're also getting the inflation data on Wednesday, expected to show, as you say, that inflation is still stubbornly high in double digits, even if we're past the peak. So both of them give ammo for another hike at the March meeting, even though it's expected to just be a quarter point.
Lizzie, when you look at UK businesses, so UK PLC, what do they want from the Chancellor?
Well, they're getting their demands in because we've got the March budget coming up, and really they want the growth agenda to be prioritised, and they want want to be incentivized to make it happen. So they want tax breaks. We know the super deduction on capital investments going to expire at the end of March. They want business rates to be cut. 'Twas ever thus. Always small businesses want business rates to be cut. But they also want help shrinking this hole in the labour market. There's a brilliant story on the Terminal and in Business Week about childcare as a way of helping to get people into work. But also they want immigration to be reviewed. Politically very difficult, economically as well. You know, Jeremy Hunt, the Chancellor, told us on Bloomberg TV he's got limited headroom, he wants to focus on inflation, but if he can, what he would like to do is business tax breaks.
Yeah, and so we'll see if he can get anything done. Then we had a Bank of England official actually talking earlier this morning. It was quite incredible, saying Brexit cost each household £1,000.
Yes, and this is Haskell, Jonathan Haskell, but he's adding to the chorus of MPC members who are being more vocal about Brexit. So we already had Hugh Pill and Catherine Mann talking about the inflationary impacts. And so you can sense that the bank's getting a little more bold in its commentary on Brexit, and perhaps so they should, given the time has passed enough that they can separate the difference between Brexit and COVID and the war in Ukraine.
Lizzie, thanks so much. Lizzie Burden, there, our UK correspondent. Now, we'll be covering all things UK every week on Thursdays. That's at 9:30 a.m. in our half-an-hour UK special, so don't miss that. In the meantime, this is what markets are doing. Of course, stocks pretty much muted. Their investors positioning themselves for an action-packed week, including the release of U.S. consumer price data that may actually confirm the inflation battle is not over. Now, Treasuries range-bound yesterday, following a pretty big sell-off in U.S. government debt on Friday. That actually pushed up the 10-year Treasury yield. I don't know if we have Treasuries. Maybe we do. The U.S. 10-year Treasury yield by 7 basis points. Again, what we find out this week, investors reassessing how high U.S. interest rates will rise this year, with inflation and jobs data likely to come in hot later this week. Coming up, mystery balloons, aliens probing our atmosphere. Yes, we'll bring you the latest as UFO fever grips Washington and the world. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah.
And so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Daybreak with Lisa.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is countdown to the close. Welcome to Bloomberg Crypto.
Investors brace for key U.S. inflation data tomorrow as hopes for a Fed pivot start to fade. U.S. fighters down a fourth flying object as tensions rise between Washington and Beijing. A Chinese news outlet says authorities there are preparing to down a UFO near a naval base. Plus, the death toll in Turkey and Syria from last week's earthquakes approaches 35,000. A business group sees an $84 billion hit to the Turkish economy. Welcome to Bloomberg's Surveillance, everyone. This is Early Edition, and I'm Francine Lacqua here in London. Now, U.S. forces have shot down 4 unidentified objects over North America in less than 2 weeks, and a third in as many days. The latest object was taken down over Lake Huron in Michigan over the weekend. It comes roughly 1 week after the U.S. downed an alleged Chinese spy balloon off the coast of South Carolina. Now, in the past hour, China has also said that U.S. balloons have trespassed more than 10 times since last year. Well, joining us now is Elizabeth Bra, Senior Fellow at the American Enterprise Institute. Thank you so much. Elizabeth, when you look at what exactly has been happening over the last 4 days, like what's going on, I don't think the U.S. had shot an object on U.S. airspace ever, and now there are 4 objects.
That's right. It's really the craziest sequence of events, I think, any U.S. citizen has seen in recent memory. So what happened, as your viewers will recall, is that a few days ago, a spy balloon or a balloon was spotted over U.S. airspace, and at that point, it wasn't clear whose it was. The U.S. thought it was the Chinese balloon. China said, well, it's nothing to do with us. And after a while, they said, oh, it's a weather balloon. It's nothing to worry about. Then the U.S. shot it down after it had left U.S. airspace, as your viewers will recall. And it was indeed some sort of surveillance balloon. And now we have 3 more objects that have been shot down, and also reports over these past few days that there have been additional Chinese objects traversing U.S. airspace in recent months, and even during the Trump administration. So there has clearly been something going on. And with this Chinese spy balloon, the U.S. sort of caught on to, or the U.S. authorities sort of caught on to the fact that something was flying through their airspace and that they needed to do something.
But Elizabeth, yeah, I mean, I have to say, it's just so bizarre. And we saw the situation where there was, the second quarter of the Super Bowl, which is huge in America, and Pentagon officials were trying to field questions about possible extraterrestrials. So what's the truth in this? Is it very mundane? Have we just not been able to see some of these flying objects in the past?
It is crazy that we are talking about extraterrestrials as a part of just standard daily discourse. It used to be considered totally outlandish to talk about extraterrestrials. Here we are. I think what is clear is that the Chinese government has been sending something into U.S. airspace in recent years. And this is part of this new form of warfare that we are seeing increase between different countries, that they target one another not with traditional military means, but with other means. And if you do that, it's much harder for the other side, so the defending country, to figure out what to do. So if it's a spy balloon, well, do you shoot it down? First of all, how do you know it's a spy balloon before you shoot it down? And so it's much harder for the defending country to figure out what to do, which I think is the whole point of this, to show that the defending country doesn't really know what to do, and to embarrass its authorities in front of the citizens of that country and in front of the world.
At the same time, China has stepped up accusations of the Biden administration, saying that, you know, the U.S. had sent balloons, I think about 10 balloons, since 2022. Is there any truth in that, Elizabeth? I mean, is this just kind of what big countries do, spy on each other with balloons?
What is true is that countries of many different sizes use satellites to spy on each other. We should remember that even in the 50s, there was an intelligence or surveillance program on the U.S. side, and there was also one on the Soviet side, but the one on the U.S. side resulted in the downing of the aircraft piloted by Gary Powers, very dramatic moment in Cold War history. But in terms of what the Chinese authorities say, I think it's safe to assume at this point that we should take what they say with a grain of salt. We should remember how they obfuscated, for example, the spread of the coronavirus, COVID-19, in its early days, regardless of how it originated. The Chinese authorities obfuscated regarding the spread of it, and that's as a result of it, it kept spreading in China and in the rest of the world. And there has been similar obfuscation from the Chinese authorities regarding things like forced labor in Xinjiang and indeed existence of any sort of persecution of the Uyghur minority in Xinjiang, even though it has been documented by independent authorities. So I think it's safe to assume at this point that unless an alleged U.S. espionage balloon program is confirmed by other sources, we shouldn't take that as the truth.
So what do we know about the direction of relations between the world's two largest economies, Elizabeth?
It is that relationship is on a collision course. It has been obvious for at least a couple of years, and indeed a few years, that the U.S. government is keen to make its economy less dependent on China than it has been over the past 3 decades, and that's what we are seeing. Various reshoring program, the CHIPS Act, for example, that supports chip production in America. In the past, America and indeed other countries were fine with having all kinds of products manufactured in China, including very high-tech ones. Now the U.S. wants to bring more of that production home because it's seen as too risky to depend on China, especially as relations in the geopolitical realm, as those relations deteriorate. So we are seeing an accelerating collision between these two countries. Now, we have to remember that they have to collaborate on certain subjects, such as climate change, but it is a very tense moment.
But is it, Elizabeth, actually quite good for the U.S. election cycle, given we're not too far away from the next presidential election, 2024, and China bashing could do well with electorates on both sides of the aisle?
You are right that ordinary Americans are concerned about China and are increasingly concerned about China. And I think what is so fascinating is that back when offshoring to China began in earnest in the late 80s and early 90s, then those who protested were seen as hopelessly backwards and not with it. And now those people, especially in manufacturing cities in America, those people have been proven right. It wasn't wise to offshore all these jobs to China. And we're seeing, as a result, these efforts to bring jobs back, especially in high-tech manufacturing. But as you say, it is also the case that American politicians are picking up on this sentiment among the American public. Of course, they have the additional state of affairs to deal with, that China is behaving quite aggressively. So it's not just an electoral ploy, but certainly this is something that voters are concerned about on both sides of the aisle, and it plays quite well. In fact, I would argue that China is the only subject that unites people of all ideological, of the whole range of ideological persuasions in America today.
Elizabeth, thank you so much. Elizabeth Brother, Senior Fellow at the American Enterprise Institute. Now, coming up, we'll bring you the latest from the growing humanitarian, political, and economic impact of those massive earthquakes that hit Turkey and Syria a week ago. We'll leave you with some live images from Gaziantep in Turkey near the earthquake's epicenter.
we have only 8% of the ocean protected today. And our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least, 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
Prepares for the latest read on inflation.
There's a huge amount of uncertainty out there.
We're going to get some lumpy numbers.
Will annual rates continue to fall?
If we get a hotter print, how much does that really take some of the momentum out?
Instant reaction on Bloomberg Surveillance.
The data have come in stronger than expected.
Are they literally making it up as they go?
Plus an exclusive interview with Richmond Fed President Thomas Barkin.
It just makes sense to steer more deliberately.
February 14th might have something to say about that.
Inflation in Focus, tomorrow on Bloomberg.
Inflation will come down, but I think it'll stay persistent for a period of time, probably longer than we originally anticipated when they started bringing interest rates up. I personally am optimistic that we will find a balance point in the 5% range. That's my personal view. Of course, this one person's view. But I also think that we will end up staying there for longer.
Adina Friedman, the NASDAQ chair and chief executive officer, sharing her outlook for inflation at the Saudi Capital Market Forum. Now, economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News with Leanne Gerrans. Hi, Leanne.
Hi, Francine. 3 flying objects have been downed over North America in as many days, with another reportedly spotted over a Chinese port city. U.S. fighter jets shot down objects over Alaska and Canada on Friday and Saturday, and another over Michigan yesterday, less than 10 days after a balloon was downed off the coast of Carolina. According to a Chinese news outlet, Beijing is preparing to down an unidentified object flying near the port city of Qingdao, a city home to a major naval facility. Now, OPEC's top official is urging countries to invest much more in oil to meet the world's future energy needs. The Secretary General of the Organization of Petroleum Exporting Countries says climate policies need to be more balanced and fair, and policymakers need to look at the big picture. As search and rescue efforts near the 1-week mark, Turkey has widened its investigation into contractors after the collapse of buildings in 2 massive earthquakes. Nearly 35,000 people have been confirmed dead across Turkey's southeast and Syria, with many still unaccounted for. A Turkish business group says the financial cost of the earthquakes could reach $84 billion. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thanks so much. Now let's get more on the situation in Turkey. And the country's justice minister says at least 34 contractors are being investigated for potentially shoddy construction work. That's as the scale of the international support needed to rebuild homes becomes clearer. Now joining us now is Selva Bahar Baziki from Bloomberg Economics. Selva, the humanitarian cost, of course, of the quake is very high. What does it mean economically?
Yeah, it's an immense humanitarian disaster. We've taken a look at what it could mean in terms of the fiscal hit. We've looked at a previous case of a similarly sized quake from the province of Van in 2011. We've multiplied the public spending there by the magnitude, the relative magnitude of the current hit, and also the economic size of the immediate provinces around the epicenter. that has led to a calculation of 2.6% of GDP in the short term. And if we were to take a longer point of view and look at the rebuilding as well, that could take it to a total sum of 5.5% of GDP. Now, we've only looked at the two cities around the epicenter. In fact, the impacted area is much larger at 10 provinces. And we also expect the government to roll out a credit program, Treasury-backed, targeting the 10 provinces. So then that should really push up the estimate that we've given you. But there's still many unknowns in terms of how much of the infrastructure is hit and what the terrain is like and how much of the damage is actually suffered.
So, Selva, what do we think this will mean for an economy which has already faced, of course, high inflation, unorthodox monetary policy? Like, can the government deal with this cost? A lot of people need to be in a safer environment.
Yeah, I have to say that the government budget starts from a relative position of strength. So the necessary spending that the government will have to do is not going to be creating a long-term problem for the government budget. It's actually the unorthodox policies that the monetary side is practicing that's going to lead to an increased problems that we're going to see the economy face. Bringing down inflation with low monetary policy rates has not yielded the results it was seeking to. Inflation hit a 24-year peak at 85% last year. This took a toll on the currency as well, down by 29% in 1 year, second only to Argentina in the peer emerging economies. So this is going to add to the fragility, the ongoing unorthodox policies, rather than the fiscal side.
Selva, again, what does this mean politically then from President Erdogan?
Yeah, there is already a lot of discontent among voters because of the high inflation. I mean, 24-year peak at 85. Inflation has receded since then, but still is high, above 50%. That's really putting pressure on purses already stretched thin across the nation. For the quake, let's refer to the excellent reporting done by my news colleagues. They've shown that the delay in government providing immediate rescue and relief to the impacted area has really caused a lot of discontent among citizens. And that's not just focused on the impacted area, but throughout the nation. Finally, let's add that the government's lax approach towards building codes, quality enforcement, and oversight might have actually played a hand in seeing numbers as high as we have seen today in terms of the humanitarian toll. And that's really adding to the negative sentiment.
Thank you so much. Selva Bahar-Baziki from Bloomberg Economics joining us this morning. Now, coming up, the SPD also crashes to its worst ever result in Berlin, increasing pressure on the German chancellor to deliver on his agenda. We have more on that story next, and this is Bloomberg.
Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
The moment news breaks, no one covers the world like Bloomberg.
The return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt, with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, we just had a terrific briefing on some of the humanitarian help and some of the economic toll, of course, from the horrific quakes that hit last week in Syria and Turkey. We also now understand that Turkey is trying to weigh extending the stock market closure. So we'll bring you up to date with any breaking news out of Turkey or Syria. On to other news, and Chancellor Olaf Scholz of Germany, his party has suffered its worst ever result in Berlin, losing out to the CDU in the German capital. Now, for more on all of this, let's get straight to Bloomberg's Oliver Crook in Berlin. So, Ollie, good morning. What does this mean for the coalition?
So the coalition may actually withstand this, despite the fact that the SPD did worse than they did originally, and obviously the CDU resurged. They'll have a crack at building a coalition, but already it may not be enough for the CDU to take the area. But it's an interesting election, and it's an unscheduled one. It's a rerun of one that happened in 2021, and so that's kind of important context in how we interpret this information and how this happened. The first one was disorganized and chaotic. It happened during the Berlin Marathon, an event that I know, Francine, if you weren't following, you were participating in, but the CDU took 10 extra points than they did last time, and that really is a substantial loss for the SPD, which has taken this, since 1999, and a lot of it came down to local issues, housing a major question, but also this sense of chaos, not just in the election, but also on New Year's Eve, where there are always spirited displays here in Berlin. Fireworks on the street really got out of hand this year, and the CDU really capitalized on the law and order side of it, and maybe the SPD a bit complacent on the campaigning.
Yeah, oh, you're absolutely right. I did my personal best at last marathon. But what can we learn more broadly from this outcome?
And I think that's the question for a lot of people, and it's trying to parse how much of this is idiosyncratically a Berlin story and how much of this is a broader kind of sentiment on Olaf Scholz. I think it's maybe a little bit of both, but probably more restricted to the Berlin side of things. It's certainly a meaningful symbolic victory for the CDU. They suffered their worst loss in history back in 2021, and there's also these questions about the Merkel legacy in the context of Russia and the dependence that grew over time on the Russian gas. But it's the first recall in modern German history. The participation rate was only 63% versus 75%. So these are all grains of salt. But if you look at the broader trend in the polling in Germany over time, the CDU has really bounced back since 2021 and the invasion of Russia, now at 27%, the SPD at 20%. But as individual characters, Olaf Scholz is still relatively light compared to Friedrich Merz, the head of the CDU. So certainly something that's getting the SPD's attention this morning. Hard to glean what it means more broadly in terms of German sentiment.
Ollie, thanks so much. Oliver Crook there in Berlin on the back of these Berlin results. Now, let's also get to your stocks on the move with our Joe Easton for our equities team. Joe, what do you have?
That's right, Fran. So we're starting with the UK home builders today. Those stocks getting hit, including Persimmon, which we have on the screen here, down 3%, and the worst performer on the FTSE 100 today after Deutsche Bank warns that a lot of the good news on the UK economy and the housing market that we've seen with interest rate expectations coming down, that's now in the price according to Deutsche Bank. They're cutting a number of stocks. Persimmon, Barrett, Taylor Wimpey and Crest Nicholson all downgraded today. by Deutsche. Then I'm moving over in technology, staying in the UK space. We've got a little-known firm called Cape Technologies, up 12%. This is a digital security company. Their founder, the Israeli billionaire Teddy Sagi, is going to attempt to buy that stock for 285 pence a piece. He already owns around half of the company. You can see it trading above that price at 291, potentially indicating that we could see a bit of a bidding war coming in for Cape. Then we're moving over to one we've covered a lot, Credit Suisse. That stock getting hit once again today. Analysts at Kepler Chevreau saying that this could be a failing franchise given all the wealth management outflows that we saw last week in the earnings report. That stock, you remember, fell 10% on Thursday, down another 4% today for Credit Suisse, having a really bad couple of weeks for that Swiss banking giant. Finally, we're over in France looking at Orpea. This is the retirement home company that had a bit of a scandal last year, given some mismanagement of their funds and also some concerns around some of their practices. They have reported a sales increase today, around 8% jump in their organic revenue. That stock was up 39% in early trading, come back down to around 9%, just above 8% now, as we see on the screen there. A bit of uncertainty in that stock still, but getting a bit of a relief over in Paris.
Thank you so much. Our equities reporter there, Joe Easton. Now, in the meantime, European stocks are actually posting still modest gains overall. I'm looking at Wall Street. Equity futures are pretty much changed. Investors really trying to position themselves ahead of an action-packed week. Now, this means that we'll get the release of U.S. consumer price data, and that may or may not confirm the inflation battle is not over. It could dash hopes of a Federal Reserve rate pivot. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller in New York, Anna Edwards here in London, and this is Bloomberg.
Jacobson assured me that when he takes the new Hummer EV on long journeys, it's not just fun to drive, it's equipped to go the distance.
I hear so much about road trip anxiety that I wanted to experience it myself. My family likes to drive a lot, so I brought my daughter home from college in this, and it was great. I mean, the computer system is all intuitive. It tells you how to keep track of the battery. It tells you where the charging stations are. It tells you how much power you'll have when you get to the charging station. So it really puts a lot of your anxiety at ease. But as far as driving it, it's a treat.
So where are you on the charging stations? I know General Motors has made an investment in one company. How are we doing in this country generally in getting charging stations in?
So I think this is an area where obviously we can continue to improve as a country and a society. We're doing our best. We've committed almost $1 billion to EV charging. So we've taken that and looked at home charging solutions, local community solutions, and road trip charging solutions. With my daughter, what we would end up doing is probably stopping, grabbing a bite to eat, plugging it into a charger, usually a high-speed charger, to get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing some of those anxious points for people?
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Inflation will come down, but I think it'll stay persistent for a period of time, probably longer than we originally anticipated.
The peak of inflation is clearly in. I certainly think we're not going to see any further rate increases.
You're clearly capturing deflationary forces. The risk is we could see a higher print. If we see a higher print, we will try to read a lot more than we should into that number, and that could derail some of the price action we've enjoyed.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. The U.S. shot down a fourth flying object as Washington decides to be more cautious about intrusions. Meanwhile, China says U.S. balloons illegally flew over its territory more than 10 times since early 2022. Olaf Scholz's Social Democrats had its worst ever result in Berlin polls, losing to the Christian Democrats. It was the SPD's first defeat in the city since 1999. And inflation fears swirl. Investors brace for key U.S. inflation data, which risks dashing hopes for a Fed rate pivot. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And Matt, a lot is riding on that data print tomorrow out of the U.S.
Yeah, absolutely. I mean, stocks not doing a heck of a lot right now. I'm not saying that they won't move all day long, but certainly tomorrow's data is key for this rally to continue. We did end Friday on a positive note for the S&P 500, down for the NASDAQ, but right now you can see S&P futures doing a whole lot of nothing, down 1/100th of 1%. Okay, now completely unchanged. So watch this space. It could be driven maybe by individual movers today. We could have actual fundamentals moving the markets rather than the macro picture that we've all focused on so intensely. You can see the 10-year yield just barely coming up a little bit right now as investors let go a little bit of that debt. 370, 359 is going out 5 significant digits on the 10-year. NYMEX crude coming down about $1. And this is really interesting because we're starting to be concerned about a slowdown globally in terms of growth, even as Russia cuts production. So there's a couple things to factor into crude. Nonetheless, we're back under $80 a barrel at 78.70 for West Texas Intermediate. And Bitcoin falling as well, about 0.6%, just under 22,000 now at $21,616 a piece. In terms of the Asia trade, we did see some gains in China. You see the CSI 300 up about 0.9%. We're going to be focusing in a lot on Chinese economic data in today's program, but just keep in mind, investors were a little bit more bullish this morning, and that could be a bigger deal than Japan, says Simon Whiter, than the Bank of Japan. You can see at the bottom of the screen here, the dollar strengthening against the yen. Right now you can buy 132 yen for a US dollar. And then iron ore, I just want to highlight here, down a little bit today, and we have seen some gains recently, so this is taking profits off the table, but also, again, maybe concerns about a slowing economy, concerns about the Chinese data, because this steel-making material is key to growth. Anna, what do you see in terms of Europe?
Yeah, well, certainly that iron ore story jumped out on the GMM screen when I was looking at that earlier. In terms of the European equities picture then, Matt, it looks actually quite positive, broadly positive across European stocks, despite some weakness that we saw through the early part of the European session on US futures. So Europe looking to go slightly its own way. 2/3 of sectors across Europe seem to be in positive territory. So it is quite broad-based, but we are, of course, waiting for that key data print out of the United States tomorrow, and also the BOJ governor nomination. So all of that happening tomorrow, a busy day on Tuesday. Here's Brent crude, just just echoing, Matt, what you were saying there, down by 1.3% on the supply side, the Russia story. On the demand side, it's sort of China versus US, the different drivers there. And this is the impact that that move is having on energy stocks. Of course, last week was really positive for energy stocks. A return of cash to shareholders, a real theme from the reporting season from those energy majors. And so they've done really well running into this week. Today, we take some profits, it seems, there. Also taking some profits on the UK housing sector. Persimmon is one of the players in that space. Deutsche Bank cutting its rating on 5 companies that operate in this space. 4 of them it takes down to hold. 1 of them it takes to sell, and that is Persimmon. It's having an impact on the share price there. And 106.81 is where we are on euro dollar. We've actually retrenched quite a bit on the euro recently as the rate story, the dollar story in the United States continues to ask questions as to whether we see higher rates in the US. So that's been weighing on the euro. We just recently heard from the Portuguese central bank governor who was telling Bloomberg TV that they're going to be very data dependent when it comes to March, of course. We'll wait to see whether they deliver another 50 basis points then.
Yeah, we'll be paying attention to that for sure. The top story, though, today, Anna, has got to be U.S. forces having shot down 4 unidentified objects over North America in less than 2 weeks, and a third in as many days. The latest object was taken down over Lake Huron in Michigan over the weekend. Let's get the latest from Bill Ferries, senior editor for Asia and former U.S. national security team leader in Washington. So, Bill, this comes after, I think the U.S. has rarely shot down any objects over its own territory. Now we have 4 in a couple of weeks. What do we know?
Well, Matt, we know close to nothing so far about these last 3 objects that have been shot down. The Pentagon has been pretty tight-lipped on details. We haven't, no one has found the wreckage of these things so far. We don't know if they were balloons. We don't know if they were spy craft. We don't know if they were college atmospheric experiments that floated away. We know close to nothing. But it has ratcheted up tensions between U.S. and China. China today coming out and saying that they have spotted or identified 10 U.S. balloons that have flown over their territory over the last year. So this story is continuing. As you said, every morning we wake up with reports of something else in the skies.
Yes, and it's interesting, the things we don't know about here, Bill, when you hear about this phenomena or these events taking place, you wonder, are there more of these objects? You also wonder if we're just looking harder for them, and we've heard from the Pentagon that that's part of what's been going on here. But you also wonder about the politics, if previously we've just reacted in a very different way to spotting this kind of thing. So how is the politics playing in here?
Well, it's definitely a factor. I mean, you'll remember with that first balloon that was eventually shot down off the coast of South Carolina, the Pentagon later said it had been tracking it for a few days before it became public knowledge. Only when it was spotted by civilians and there was a lot of coverage of it did it become more of a public national security issue. We don't know. The Pentagon has said that it's basically recalibrating some of the ways it looks at the atmosphere to better identify slow-moving objects as opposed to maybe a fleet of incoming enemy fighters. It's looking for things differently, and it seems to be seeing more things. Again, though, we don't know. Some of these objects, the Pentagon said, were just floating in a zone that was dangerous for commercial airliners. We don't know that it was dangerous for national security. Those are the kind of things we're hoping that come out in the coming days.
Bill, thanks very much for joining us. I know you're doing a lot of coverage on this lately. So Bill Ferry is putting in the work there on national security as we, I guess, start to count how many objects the U.S. shoots down. Now, let's get over to Germany because Chancellor Olaf Scholz's party has suffered its worst ever election result in Berlin, losing out to the CDU in the German capital. It's the first time the Social Democrats have failed to win an election in the city since 1999. And for anyone who has ever lived there, you'll know it's almost impossible to believe that the Christian Democrats have won a majority in Berlin. Let's go to Oliver Crook right now in the Hauptstadt for the results and the reasons, Oliver. It's so crazy to think that the CDU could win a Berlin vote.
It rather is, Matt, and but actually also the conditions around this vote are actually quite relevant in how we interpret these results, right? So this is a rerun of the election that happened back in 2021. It was court-ordered for, among other things, it was held on the same day as the Berlin Marathon, which, as you can imagine, caused all kinds of logistical problems, and so they threw out the result. And since then, from 2021 until now you've seen a jump of 10 percentage points for the CDU. They had like 18%, now 28.2%, overtaking the SPD, as you you say, Matt. SPD support stumbled as well as the Greens, but a lot of it came down to local issues. You know, housing is a major concern here in Berlin, Matt. But also, Matt, as you will know, the sort of spirited and lively New Year's celebrations that occur in the streets of Berlin every year really got kind of out of hand this year, and the CDU really hammered that law and order message in trying to kind of rally some of the support. That seemed to have worked, and the SPD also perhaps a bit complacent on their campaigning.
Spirited and lively, nice description, Ollie. What does this tell us more broadly, though? I mean, is this all about those very local issues, as you've described some of them, and the specific idiosyncrasies around the earlier vote, or is this about some broader politics to do with the war in Ukraine or other issues?
So I think that's a question for a lot of people, particularly people watching from outside of Germany, and I think that it's important to try to kind of disentangle these two things. So one of them, it's certainly a symbolic, meaningful victory for the CDU, as Matt was pointing out, the kind of the scale of that also lost, you know, by the worst, that they did in 2021. They did very terribly at the polls there on the national level, so this clawing back some space. Also dealing with the kind of Merkel legacy now reframed somewhat in the wake of the invasion of Ukraine and the German dependence on gas becoming as a problem. But then you take it a bit with a bit of caution. You know, the bizarre nature of this election. It's the first recall of a German election in modern history. The participation here was 63% versus 75% the first time around. But if you look at the national average polling, you see that the CDU has been creeping up, has been gaining territory since 2021, since the invasion, up at 27% versus the SPD now at 20%. But as an individual figure, Scholz is still relatively popular, particularly compared to Merz. But it's certainly going to get the attention of the Chancellery today, and warning shot.
And if the CDU keeps winning, Oliver, you're going to have to wear a tie again. That's going to be a problem. Bloomberg's Oliver Crook for us out of Berlin. Now, we have a busy week ahead with key U.S. inflation data coming out tomorrow. We may have mentioned that we're waiting for CPI and a host of Fed speakers as well. Bloomberg Markets reporter Valerie Teitel joins us to run through the events that could move markets. Valerie?
Yeah, it's really all about the inflation print tomorrow. It's going to be on Tuesday. We get that January CPI print. Will it shift the dots higher? Will it have an effect on where we think the terminal rate for the Fed will be? But don't forget, we also have some bigger data coming out in the later half of the week, including retail sales. Just how well is that household spending holding up? We also get industrial production and housing starts. And this is important because the manufacturing sector and the housing sector, they have shown some weakness. But there's been hints that that might be starting to stabilize. That all ends with PPI later in the day on Thursday after jobless claims. But let me get back to the CPI data. If there is a surprise in January CPI, if it comes from this core services sector, expect the markets to have a big reaction to that. Powell was asked specifically last week in that Q&A, what is his biggest worry? His biggest worry is that the tight labor market will keep core services inflation too sticky for too long. But maybe it'll start to moderate at a pace that they're happy with. We hear from a slew of Fed speakers this week, including 4 after the CPI print on Tuesday. We also hear from Mester, Cook, and Bowman later in the week. Watch out for some hawkish comments, things like the door being open to going at a 50 basis point pace again, or perhaps any direct comments that their dot is moving higher already. Look, perhaps they won't be too that bold. We do have another payroll print and another CPI print before the Fed convenes again on March 22nd.
All right, Valerie, thanks very much. Bloomberg's Valerie Teitel giving us what we should watch in the week ahead. Let's take a look at some of the stocks that are moving right now in U.S. pre-market trading. First off, Sorrento Therapeutics on track for its biggest one-day loss since August of 2020. That company filing for Chapter 11 bankruptcy protection in Texas. We also have Blue Apron. It may sell shares from time to time through an at-the-money equity offering program. I believe it's about $70 million. That was their regulatory filing, so they can do that. And as a result, you see the shares moving down in the pre-market about 15%. So you have a couple of movers, but really not a heck of a lot going on in a market, Anna, that is waiting with bated breath for more inflation data that the Fed can digest.
Yeah, absolutely. You thought it was just Valentine's Day. Apparently it's not. It's Inflation Day. It's also BOJ Day. So there's a lot going on tomorrow. We will continue to sort of beat the drum ahead of that CPI data. Valerie giving us a nice overview of what to expect there. We'll continue to get insights. And next, we'll talk to Ruqayya Ibrahim, Daily Insight strategist at BCA Research. We'll ask her for her views on the CPI and indeed look ahead to the BOJ decisions. And Kansas City comes back to win. We'll have the highlights from the Super Bowl 57. Plus, remote work is costing Manhattan more than $12 billion a year. Look for our latest big take story online or on the Bloomberg terminal. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you would be.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. Wall Street prepares for the latest read on inflation.
There's a huge amount of uncertainty out there.
We're going to get some lumpy numbers.
Will annual rates continue to fall?
If we get a hotter print, how much does that really take some of the momentum out?
Instant reaction on Bloomberg Surveillance.
The data have come in stronger than expected.
Or are they literally making it up as they go?
Plus an exclusive interview with Richmond Fed President Thomas Barkin.
It just makes sense to steer more deliberately.
February 14th might have something to say about that.
Inflation in Focus, tomorrow on Bloomberg.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller here in New York. Anna Edwards with us out of London. We are simulcast on both Bloomberg Radio and Bloomberg Television. For those of you watching, you can see a chart here of the record new yuan loans in China. If you're listening, don't worry. It's not that interesting, but maybe it is. Joining us now is Simon White. He's Bloomberg macro strategist to tell us why China is maybe more important than the BOJ for global markets. Simon?
Oh, hi, Matt. I'll do my best. So I've had a lot of news out on Friday about China and the potential announcement of the new BOJ governor. Japan's been given kind of main billing so far, but I think the second feature, China, the data out of there, I think will prove more consequential in the short to medium term. And as you had the chart there, you've actually now began to see an expansion in credit in China after many false starts. And also, if you look at money growth, you look at M1, which is one of the best cyclical indicators of what's actually happening in China, as opposed to what's been said. So that now looks like it's beginning to get traction. And I think that has far more kind of like consequence for for the next few months than what's happening in Japan.
So that's why that chart was interesting then. It showed a pickup in credit, and as you say, money supply also in focus then, Simon. Which bits of the Chinese economy is this going to benefit? Because then this has direct knock-on into other Asian economies and into Europe, for example, as to who else benefits. You know, is this an industrial recovery, or is it actually much more about services for this reopening?
So I think it's across the whole economy. The issue with China is when they try and increase credit, it doesn't always get to the parts of the economy that need it most. And when you start to see money growth, M1 specifically, turn up, it's really a sign that that's beginning to reach all corners of the economy. So I think it will have impacts for Europe. I think even more sooner than that, and we've got CPI tomorrow, but in the next few months of CPI leads, I think it could definitely have an upwards thing on global inflation, including US CPI. So I think over the next few months, we've had this trend down in CPI lower. I think that could start to turn up, certainly sooner than I thought it was going to turn up because of this change in China. So that's why I think it's very important.
How concerned are you, Simon, about the geopolitical risks here? I mean, we had, I think just a couple of weeks ago, a U.S. Air Force general predicting war by 2025. You're starting to see tensions ratcheted up over balloons, as shocking as that is. Does it factor in?
Yeah, I mean, look, this is always like an ongoing kind of issue with China, right? The geopolitical risk is always like 1 or 2 years down the line. I think investors kind of have to try and, look through that. It's never going to be something that's irrelevant to them, but, things like looking at the data and what's happening underlying, I think, is a much better kind of indication of what's actually happening. So, for instance, again, looking at real money growth, lots of China bears, perma bears have been up at China, there's been perma bulls. But if you really want to catch the ups and downs of what's been happening with China over the last 10 or 15 years, just follow the money growth. And that would have done you very well.
Okay, so following the money growth, that's the key, you think. What about the capital outflows story? What's that been telling us? Because this isn't just about COVID. We've seen capital outflows, it seems, from your report over a number of years, even though although we have recovered from the very depressed levels or the very extreme levels that we've seen.
Yeah, I mean, I think that's the key thing there as well. I mean, China basically, the way it kind of eases, if you like, they end up expanding their export sector. That's fantastic, but for the export sector, but for the household sector, it's terrible. So they've been repressing the household sector to the benefit of the export sector. Now that looks like that's beginning to kind of rein itself in, and liquidity conditions and capital outflow are improving, which is very good for domestic liquidity. So really, it's a lot of things are now coming together. It looks like China's turning a corner.
Okay, Simon, thank you so much. Thanks for joining us. Bloomberg's Simon White with the latest on China and its significance. For more market analysis, check out MLIV Go. That is the location of the Markets Live blog. They'll be all over the BOJ, the Chinese reopening story, and indeed the CPI print tomorrow. This is Bloomberg.
Names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
Seeds, typically between the time you start and they get out in the farmers' fields, is about 8 years. Now we have a pipeline of innovations. we've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
Complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Now, keeping you up to date with news from around the world, here's the first word. Turkey has begun collecting blood samples to identify the victims of the 2 earthquakes that struck the country's southeast a week ago, the death toll mounting to nearly 35,000 in Turkey and neighboring Syria. A Turkish business group estimates that the economic losses from the earthquake could reach $84 billion. Meanwhile, Turkey has widened its investigation into contractors after the collapse of those buildings. Goldman Sachs CEO David Solomon is reported to have said he should have acted sooner to cut jobs. The FT says he told a private meeting that the layoffs would have been less drastic had he reacted when signs of a slowdown began to emerge in the second quarter of last year. Goldman is slashing 6.5% of its headcount, one of its largest rounds of job reductions in history. Citi is nearing the sale of its Mexican retail bank, Banamex. The Financial Times reporting the deal could value it at up to $8 billion. Grupo Mexico owner Germán Larrea is in exclusive talks to purchase Banamex. And the Kansas City Chiefs beat the Philadelphia Eagles 38-35 in the Super Bowl. Patrick Mahomes helped deliver the win with an injured ankle. He threw 2 touchdown passes in the fourth quarter and ran 26 yards before Harrison Butker kicked a 27-yard field goal with 8 seconds left, leading the Chiefs to victory. There will be, though, a lot of questions about how big a role officials played in this game, Anna.
We'll get back to the markets next. We'll talk to Daily Insight strategist at BCA Research, Ruqayya Ibrahim. This is Bloomberg.
the standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the illiquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? It is high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night. Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The U.S. shot down a 4th flying object as Washington decides to be more cautious about intrusions. Meanwhile, China says U.S. balloons illegally flew over its territory more than 10 times since early 2022. Olaf Scholz's Social Democrats had its worst ever result in Berlin polls, losing to the Christian Democrats. It was the SPD's first defeat in the city since 1999. And inflation fears swirl. Investors brace for key U.S. inflation data, which risks dashing hopes for a Fed rate pivot. I'm Anna Edwards in London with Matt Miller in New York. And Matt, you know, the markets are focused on the inflation data. That is no doubt the case, but very highly read on the Bloomberg terminal any story about these unidentified objects being shot down in American and Canadian airspace and potentially also perhaps over in China in the future. This story certainly gripping a lot of people.
Yeah, I think I read that the Pentagon cannot confirm that none of the objects are not extraterrestrial. So there could be aliens coming here that now we have shot down. And I fear we have awoken a sleeping giant. Let's take a look at what's going on in terms of financials this morning. We're not seeing a lot of movement on futures. There they are. S&P futures down only 0.05%. It's not just the CPI data, right? We heard Valerie Teitel earlier say we have a slew of Fed speakers this week, and that has the potential to drive the markets in either direction. So investors may be sitting on their hands, waiting until they see which way it's going to go before they place their bets. U.S. 10-year yield also very much unchanged right now at 370, 340. Still a relatively high level. You know, we had been seeing 350 and below for quite some time until this most recent climb. And then we see NYMEX crude coming down $1.10 a barrel to 78.62. This is West Texas Intermediate, but Brent crude is also coming down pretty substantially on concerns that the global growth just isn't there to support the demand. This even after Russian supply cuts of 500,000 barrels a day were announced last week. And then Bitcoin down below 22,000 at 21,573. We've got some interesting stories in crypto today. Binance has been told by its partner Paxos that they won't be minting any more of its BUSD coins. And of course, last week we had that ruling on Kraken and the move from Coinbase in terms of staking. So a lot to talk about in crypto, which we will do still with Kaylee Lines tomorrow at 1 p.m. in the afternoon. In terms of pre-market movers, just a couple to note. One is a big bankruptcy. So Sorrento Therapeutics on track for its biggest one-day loss since August of 2020. It filed Chapter 11 bankruptcy protection in Texas. This company, the stock had been more than decimated last year, but had been making a recovery this year until the bankruptcy filing. And then Blue Apron may offer and sell shares from time to time through an at-the-market equity offering program up to a total of 70 million announced in regulatory filings last week. So investors may be bracing for that with a sale of those shares in the pre-market down 13%. Anna, what do you see in Europe?
Yeah, it's interesting that U.S. equity markets offering a little bit of downward focus, whereas European stocks offering something different, up by 0.3%, although those U.S. futures off earlier lows, of course. So a pretty broad-based rally going on for European stocks, even if it is modest, waiting for those big set-piece events around the BOJ and the inflation printout of the U.S. and all of the other data that you mentioned, Matt, as well. Brent crude, Matt has already talked about what's going on with WTI, down by 1.3%. The Russia side on the supply narrative. Then you've got the U.S. versus China and the demand narrative. Persimmon is a house builder in the UK, down by 2 3/4% today. We've seen Deutsche Bank reassigning ratings to operators in the housing market here in the UK. And in fact, 4 of those companies they've taken down to hold, but 1 to sell, and that's Persimmon, and that's having an impact on the share price. And 106.82 is where we trade on the euro dollar. So this worth checking in on ahead of that CPI data that we get tomorrow out of the United States. Previous data, of course, has pushed the dollar higher and led to some weakness in the euro. That's been the very recent developments over the last couple of weeks or so because of that strong jobs report we saw out of the United States. Also, the European growth story keeps getting upgraded. We've seen this from a number of banks, and now we're seeing it from the European Commission just this morning, saying that they're not expecting quite such a challenging time for the Eurozone economy right now. Matt?
All right, joining us to talk about really the big macro themes is Ruqaiya Ibrahim, Daily Insight Strategist at BCA Research. Ruqaiya, thanks so much for joining the program. We had a great story on the Bloomberg yesterday saying, regardless of what you make of Kazuo Ueda, the new BOJ, or reportedly the new BOJ leader, we've already started to see money coming back to Japan from around the world. And you could see $2 trillion come out of global bond markets heading back home in yen. What do you think of the BOJ and the possibility of rates floating up as an attractor, I guess, as a tractor beam for money from global bond markets?
I think that's probably the cyclical story for Japan. I think that what we're seeing right now in Japan is that we're seeing some positive economic surprises. We got the Economy Watcher survey last week that showed the expectations component of that survey increased quite a bit, beat expectations by quite a bit. We also got inflation and wage data recently, which is still quite perky. It hasn't rolled over like it has in other parts of the world. And I think that's probably what's going to drive BOJ policy going forward. I think the fact that, or the likelihood that Ueda is going to take over as the next BOJ governor sort of increases the odds that policy is going to be pragmatic over the future. And I think that probably raises the likelihood that they're going to eventually exit the yield curve control policy and reduce reduce how much easing is needed for the economy.
Yeah, Ruqaiya, good to see you. So if we are going to see a pragmatic approach, what would a pragmatic approach to the data in Japan look like? I mean, they haven't been seeing the same inflationary pressures as other economies outside Japan, but they have started to see more inflationary pressure over recent months. How do things look to you?
Absolutely. I think if wage data and inflation data continues as we've been seeing it recently, that could put pressure on the BOJ to exit their ultra easing policy. Now, I don't think that's going to happen right away. Like I said, Ueda is going to be pragmatic. He's not going to come in and implement any policy changes right away, but it could be sometime around the summertime where we start to see maybe lifting the yield curve control cap, and that's going to support the yen, I think, on a cyclical horizon. Not to mention also that the yen is extremely undervalued. It fell quite a bit last year, and so I think macro forces are moving in its favor now.
We were talking earlier on in the program, Ruqaiya, about iron ore. Matt was referencing the price retreating on uncertainty over the Chinese reopening story and how much that adds to steel demand. How much do you see China reopening as about industrials, construction, and how much of it is really going to be confined to the services sector? Where should we put our emphasis?
Yeah, I think that's really the story here, is that there's going to be a dichotomy within the Chinese economy. I think the lockdowns have really impacted the service sector much more than they impacted the manufacturing sector. So the consumer services sector is really what's going to benefit the most out of the reopening, whereas the manufacturing sector still faces headwinds from global demand coming off its pandemic highs, and that's going to be something that's going to limit how the benefit for the manufacturing sector. And if you take a look at the construction sector, the property market challenges are still there, and that's going to limit how much the benefit of the reopening is going to give to industrial metals such as iron ore, copper, which have already rallied quite significantly on news of the reopening. So I think that there is scope for them to come down a little bit because I think they probably overshot what the macro fundamentals warrant.
Ruqaiya, even after all of your work at BCA, I'm sure looking into historical recessions and unique events that led to them, all your studies at McGill in economics, even with all of that, are you prepared to forecast a recession after the kind of global pandemic that we've had, after the kind of fiscal stimulus that we've had, after the really seemingly unique situation, unprecedented situation? Can you really draw any references from historical periods to help you shape your view of the future now?
I think we're living in unprecedented times. It's very tricky to get a read on what's happening with the economy. The soft data is much more positive than what we're seeing from the hard, it's much more, the soft data, we've seen a lot of improvement in the soft data, things like the ZOO, the Centex, the IFO, those are all improving, but there's still some negativity, for example, from PMIs, whereas when we take a look at the hard data, that's extremely strong. If you take a look at the labor market, that's extremely strong. So I think that there's a lot of mixed messages going on in the economy, and that makes it very difficult to forecast what's going to happen next. But I think what we're doing is we're really watching what is happening with the data very closely, what the implications are for the Fed, and that's going to be the best guide of what's going to happen coming up, because they're doing exactly what we're doing. They're watching the data and basing their policy on that.
So we added 517,000 jobs last month, and we revised upward a lot of the previous data. If we get, inflation coming down more than expected, or if we get a beat, which way does it go tomorrow after the CPI?
I think what matters more probably is looking deeper into the components of CPI rather than if it's a beat or what happens to headline or core number. I think what we're watching most closely is the ex-housing core services component that Powell has repeatedly highlighted as what they're most concerned about. And I think that's really what matters over the next few, or the coming CPI and PCE reports, in addition to the labor market report, which, if we get other signs that the labor market is still extremely tight, I think that's going to point to continued upside pressure on this component of CPI.
Ruqaiya, thank you very much. Ruqaiya Ibrahim of BCA Research, thanks very much for joining us. Coming up, we'll get back to the geopolitics. The US shoots down another flying object in American airspace. We will discuss the significance next. This is Bloomberg.
Why'd you do this project? Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat, are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. And Anna, does look like we're going to be focused very much this week on not only inflation and what the Fed does, but what we're shooting out of the sky here over the U.S. Previously, the U.S. military had never, at least as far as we know, shot anything out of the sky above the United States of America. And now we've shot down, what, 4 flying objects in a couple of weeks, and they could be aliens, apparently.
Well, they could be. I mean, not ruling anything out, I think, was the words of the Pentagon. Yes, 3 over the US, 1 over Canada, just in the last few weeks or so. And of course, when we start to see more of this being reported, Matt, we ask ourselves questions as to whether this data, whether we really are seeing an uptick in the number of these objects, or are we just looking a lot harder for them? And that was certainly something that the Department of Defense was pointing to, the fact that they've changed the way that they use their radar on this, maybe at different altitudes, looking for slightly different things, as we were hearing from Bill Ferries earlier on. Or was it that we just knew about these things all the time, but have just, the US, I should say, has changed the way it responds to them? Which of these applies, I suppose, is still up in the air.
I think, you know, the interesting thing is that since in reality they're unlikely to be extraterrestrials, right? We are now realizing there's so much more stuff at ultra-high altitudes than maybe we previously would have thought. But some people have pointed out this could be even college experiments, right? Weather experiments, maybe even, you know, solar testing models. So it could be anything up there. And it does seem like we're just looking more than we previously had. And I guess we're shooting first and asking questions later. Certainly,
well, indeed,
it didn't look great when we allowed that Chinese spy balloon, reported spy balloon, or alleged spy balloon, to float all the way over North America from basically Alaska to the Carolinas before we shot it down over the sea. And it seems like the U.S. military, the U.S. administration is becoming a lot more proactive now than it had been during that week.
Yes, absolutely. And so you wonder how much domestic politics in the United States, and you'll know this better than me, Matt, is playing in here. You know, substantial criticism from the Republicans that that object wasn't shot down on site, and therefore the Democrats choosing to take a different path with these objects that have more recently been seen. But I suppose geopolitically, what's really interesting here is we've had no confirmation that any of these other objects are of Chinese origin, but it's interesting the way that this is playing into those tensions. And in the context of a sort of New Year pivot in the relationship. We had seen a thawing of relations between the US and China. That was the intention. We were supposed to see the Secretary of State visiting China and adding to that sense that things were getting better between these two superpowers. But Matt, that doesn't seem to be the case, especially when you know, early on in the European hours, we tracked the foreign ministry briefing in China daily, and yeah, this was the topic of conversation once again, the way that America is now shooting these objects out of the sky.
Right, and the fact that now China claims that 10 U.S. spy balloons have floated over its territory, just to make things even murkier. All right, we'll continue to focus on this story surely throughout the day, if not the rest of the year. But coming up in other ways to look at it, we're going to have Eurasia Group President Ian Bremmer. That's at 8:30 a.m. New York, 1:30 p.m. London time. He focuses on these geopolitical issues, and I'm sure he'll have a lot to say about the balloon and the other, as of now, unidentified flying objects. This is Bloomberg.
we have only 8% of the ocean protected today. And our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least, 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
The top names in business are on Bloomberg.
Different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but the vulnerabilities that amplified previous recessions around the world are not present. That omens well for a mild recessions when they come.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now a look at what is ahead this week. On Tuesday, we will get US CPI data at 8:30 a.m. Eastern Time, the big data point of the week, really. UK inflation also out, though. That's on Wednesday, as well as retail sales from the United States. On Thursday, the slew of US economic data continues. We get US PPI at 8:30 Eastern. On Friday, the Munich Security Conference begins with arms donations to Ukraine, sure to be a hot topic, and possibly they'll be discussing what's been going on in the skies over the US and Canada, Matt.
Yes, let's talk more, even more about that. The U.S. shot down a third flying object in as many days. It's the fourth in North American airspace this month. The Defense Department doesn't yet know what the most recent objects are, but they approached sensitive military sites, reportedly, and posed a potential threat to commercial aviation, apparently, as well. Roz Matheson, Bloomberg Senior Executive Editor for Government, joins us now. So, Roz, what can you tell us? I guess this is going to become a common occurrence.
Well, it looks like it. The question is, was this occurring, in fact, before this and potentially for many years? What we know is that countries have always spied on each other, and it seems as though these balloons may have been going back and forth from various countries around the world for years. We know, of course, that some went across the US during the Trump administration, for example. So why is it becoming such a big deal now all of a sudden? Is it because this one balloon flew so close to the ground that it got spotted by a farmer out in Montana and therefore set off this chain reaction, and what was quietly understood to be a pattern of behavior with balloons floating around in the atmosphere has suddenly become something very different?
What does this tell us about China-US relations, Roz, at this point?
Well, that's the thing, of course. Even if these three latter objects turn out to be very benign, perhaps they were weather balloons from another country, or they were junk or something else that was floating around, and really we've only talking about this one particular surveillance balloon or alleged surveillance balloon over the US and the one that went across Latin America. What it does say is that the window for an improvement in ties between the US and China has to be narrowing. Of course, we had the presidents of US and China meeting late last year, and really an effort to put a floor under the relationship. But as this drags on, and perhaps as the allegations come thick and fast, of course, China is now accusing the US of putting balloons over its territory. Does that shut the door on this opportunity to really have at least a brief thaw in ties?
All right, Roz, thanks so much for joining us. Bloomberg's Rosalind Matheson there talking to us about an issue that we will no doubt continue to cover for you. Let's get, though, to the Super Bowl, shall we? Super Bowl 57 came to an end with the Kansas City Chiefs beating the Philadelphia Eagles 38-35. Joining us now is Michael Barr, co-host of Bloomberg's Business of Sports and a news anchor at Bloomberg Radio. Michael, thanks for joining us this early. You're usually here before I am, I will tell our viewers. Were you able to stay up and watch the whole Super Bowl last night?
Yes, I did.
Now, I heard Truman told me it was an amazing game.
It was a great game up until about a minute and a half left in the game, and everybody's going to talk about the Bradbury penalty that the refs called. Now, one ref now can go into Philadelphia because Philadelphia, they feel like they got robbed, and it was, let's be honest, it was a ticky-tack call.
Now, this has been the story of the NFL for me all season long. The refs make bad calls, or the refs make unwanted calls. The refs decide the fate of the game, the winner and the loser. That's not how it should be, right? Why doesn't the NFL do something about this?
Well, if you ask Roger Goodell, he said the refereeing has never been any better, which, you know, I guess if you're a fan of the league, all this happens when we got instant replay and we could see this all over again, and then some fans feel, and they still got it wrong. And what happened to James Bradbury, I mean, he admitted he grabbed the jersey, but I mean, let him play at this point. That changed the whole game.
Okay, Michael, it's very nice to see you quite so early here in New York. So thank you very much for joining us. I will not pretend to know very much about what was happening on the pitch, but what was happening off it was really fascinating in terms of the ad spend. Let's talk business of sport. Well, there you go. I gave myself away there. I'm in the wrong geography, the wrong time zone to appreciate the Super Bowl. But ad spending not coming from the same place as it came from last year. That's for sure.
That's true, and there were some memorable ads. I know people are saying that, well, maybe it wasn't. Now, the one that was just airing right now with John Hamm, that was a funny ad. And then with Kevin Hart, that was also a humorous ad. There were some good ads out there. I think the best one I love, there was supposed to be the fight between Coors Light beer and Miller Lite, and it turned out that it was a Blue Moon commercial, and that was really funny to me, so that stuck out.
Well, and we got some breaking news, right? At the halftime show, apparently Rihanna is pregnant.
Yeah, I'm looking at the halftime show, and all of a sudden, I can't find a delicate way to put it, I saw a pokey stomach, and I'm like, wait a minute, she's pregnant. It's like, and then the news came out, yeah, she's expecting, and was it ASAP she had the first baby with?
I don't know, but apparently she did a great job, a medley of all her songs, didn't bring on any... I thought Chris Stapleton was quite good at the beginning, singing the Star Spangled Banner, and I noticed that he drove up in Ram Rev, their new electric truck, and Ram had a number of ads there too. So, Michael Barr, thank you so much for joining us. Pleasure having you here with us on set. Bloomberg's Michael Barr. You can check out his podcast, The Business of Sports. And Anna, I guess... maybe I'll help you brush up on your NFL for next year.
Yeah, you should. You should. I thought Rihanna's performance was pretty spectacular, very impressive staging. I'll stick to what I know about, shall I? Right, that's it for Early Edition. Surveillance is ahead. This is Bloomberg.
Fixing things that go wrong and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's Renewable Assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional asset?
monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site. Whereas this, we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and then it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
I find it hard to imagine a world where the US is in disinflation, as we're pricing at the moment, and Japan is seeing aggressive inflation.
The US probably has a better growth dynamic, in part because the Fed has been one of the earlier central banks to start tightening policy.
People are overestimating how hard it is to get the supply side back online.
What we're looking at is not what we'd call terminal peak. We're looking at terminal floor.
I think we're seeing a last hurrah in terms of some of these interest rate increases.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
I thought the Doritos ad was just really harsh. I found personally attacked.
Oh, because of the pound?
Replaced by the triangle.
I think that was the funniest one out of all of the ads. 100%.
From New York City this morning. Good morning, good morning. We'll pick up on that a little bit later. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures right now turning positive by 0.1%. What a week we've got set up for you. CPI coming up tomorrow. Then Tom, on to retail sales on Wednesday.
All of a sudden, retail sales is important because you click in the consumer here. You know, I just think that there's a whole thing going on here, a whole debate over the weekend. Inflation's going to be higher. That was the theme of the weekend. Oh, inflation's going to be higher. Torsten Slok, I think, absolutely nailed it when he said we're relying on the consumer, and that's what we get with retail sales.
The bear market's over. Chris Harvey of Wells Fargo this morning. Did you see that come through? This was the quote. The new scenario in play is wheels up. TK, you love this stuff. Where growth takes off after an aborted landing, our base case is a non-hard landing. Is that the Torsten Slok, Neil Dutter? No landing view?
Yeah, there's a huge battle into Wednesday's report. I feel like I'm on the Super Bowl here. Well, I think the Eagles, and then all of a sudden the Chiefs are winning. Well, the Chiefs. There's a huge...
Mahomes is injured, then he's not.
He's hurt. Oh, my God. Powell's got a sprained ankle.
Oh, boy, I can tell that
what
you did last night.
But the answer is there's a titanic struggle going on, and it was in every research note this morning.
Bank of America credit investor survey that came out today I thought was interesting. No longer the top concern is a global recession. That is off the table now. Now it is about central bank policy errors, perhaps raising too fast in terms of the reacceleration of some of this growth, something quote unquote breaking, or geopolitical tensions. Do we start to see more headline risk with the onset of UFOs?
Go there. Wasn't that bizarre over the weekend?
So bizarre.
So just flying object after flying object.
It felt like someone was in a science fiction movie.
And then China said, we found one.
Right, exactly.
We found one
too. We got some balloons. It's Balloon Gate, global Balloon Gate. No, this to me is a real question. When do we take the balloon situation very seriously? Because everyone's finding balloons and shooting them down, and suddenly it feels like we're being invaded by something problematic.
That they can't rule out. Which was equally as bizarre.
Elon Musk coming out.
Equally as bizarre.
Basically said, my people are coming.
Greg Valli is scheduled to be with us, and when does all this silliness fold over to people actually doing business with materials from China or selling to China? To me, that's the jump from bipartisan angst over China to what's it really mean for American business.
Tom, I think we're there already. We're having a conversation about more export restrictions.
Yeah.
And that was the conversation last week as well, Lisa.
Well, especially then it raises this question of TikTok. When we get that hearing next month, do we get some sort of acceleration in the plans to ban TikTok? And what is the ramification of that, given how popular it is among the younger generation who votes? And then also what kind of retaliatory measure there is from China?
We'll pick up on that a little bit later. Equity futures right now on the S&P positive 0.1%. We are coming off the back of the biggest weekly loss of the year so far on the S&P 500. And in fact, the first weekly loss of the year so far on the NASDAQ. The NASDAQ trying to bounce back by 0.4%. Yields basically unchanged on a 10-year at 373. And after a monster week of gains on crude, we pull back just a little bit by 0.9%. Lisa, crude right now, 78.98.
The big event this week really is CPI Tuesday, as well as, of course, Valentine's Day, where we find out who sent Tom what. But 8 a.m. today, we do hear from Fed Governor Michelle Bowman. She's speaking at a conference in Orlando, Florida. Does she give some indication of what "don't fight the Fed" means? This is what I was thinking about over the weekend. What does that mean when the Fed is not fighting a fight? They are basically data dependent, and so is the market. The data has been coming in hotter than expected, re-acceleration. That's been the feel on the margins, and you have seen that reflected in the one-year yield and the expected terminal Fed funds rate, which now is 5.2%. 11 a.m., we get the view from the other side of the Atlantic. ECB Governing Council member Mario Centeno is speaking at a London School of Economics event. What kind of read-through do we get in terms of the ECB and what their response function is, especially after we just got the opposite of what we got all of last year? We got basically an upgrade to growth and a downgrade to inflation overnight. I thought this was really interesting from Europe, given all of the gloom and doom last year, just sort of hammering home how the facts have truly changed. And just to build on the Torsten Slok discussion and whether we are seeing a real acceleration of the consumer aftermarket, we get earnings from Avis, Denny's, and Vornado Realty Trust, and as much as we want a sense of how many kids are going to diners at 2 a.m., which is sort of what I associate with Denny's. I am curious how much we see this re-acceleration borne out by some of the forward projections of these very consumer-facing companies, particularly also real estate, given that consumer sentiment is coming back and rates had been going down. Now we're kind of creeping up on the margins, John.
Lisa, thank you. That's the latest from Lisa on the day ahead. Look out for all of that going into CPI tomorrow. Joining us right now is John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management. John, wonderful to catch up with you. I know you're more constructive than most, especially coming into 2023, and so far, so good. Mike Wilson of Morgan Stanley this morning says price is about as disconnected from reality as it's been during this bear market. What would you say back, John?
I'd say Darth Vader. I disagree with you. Let the force be with us. Effectively, I think what we're seeing is that things are actually improving around the world. I think Lisa just mentioned in terms of Europe, the way things are looking over there, the better than expected earnings so far. Last I looked, I think earnings were off for fourth quarter for the S&P 500 around 2.5% versus expectations, I think, going into it at 3.5% or worse. I think companies are doing their job to navigate a rough environment overall. And we have the Federal Reserve doing the job to end the period of free money and put us back on a more realistic course that should be good, where fundamentals overcome momentum and high leverage.
John, you were very articulate about extending a bullish call out to where we finally got a Stolfus market. We certainly have a Stolfus market. Around this is the trading and churning on the market. I thought of you when I saw this observation from Ben Laidler of eToro. In the old days, we used to hold stocks for years. Now we hold them for months. We've gone from a 5-year hold to an average 10-month hold. How do you do Stolfus optimism if people on a 10-month basis are pretty close to day trading?
Well, I think that's a great question, Tom. I think more than ever before, there really is a recognition that there are starting from point one, you have two different types of investors. You've got the short-term crowd and you've got the intermediate to long-term crowd. Short-term, evidence of fear and greed, and longer-term, it's need and the realization that investing in innovation in corporations that know how to manage their products and their services. This is the way to go for a portion of one's portfolio in terms of meeting the needs of whether it's a kid's education, whether it's a retirement, what have you, the serious goals. And the fun stuff is the day trading, you know? I mean, not for me. I'm an intermediate to longer term investor. I'm a Buffett guy.
Well, I am curious, though, John, at what point you start to get worried about the central banks going much further than they previously said they would if you do get this reacceleration? It seems like that's the preeminent concern among a growing number of investors right now.
Yeah, I would say that is preeminent, at least among the trading crowd, for sure. And remember, the traders are closer to equity traders today are closer to commodity traders from the past in terms of the way they position themselves on a day-to-day, minute-to-minute basis. But we'd have to say the central banks are doing their job and are showing remarkable ability to essentially, if not pivot or pause, and I don't think that's needed right now, but to maintain a view that they're going to be vigilant against inflation, they're going to take action against this. I don't think any central banker around the world wants to be remembered as Arthur Burns is remembered.
So what's your target for year end, and what's the parameters, what's sort of the band that you see at this point, given that it is a highly uncertain time, and yet there does seem to be this growing sentiment of a no landing?
Well, Lisa, I've never known a period in 40 years, almost 40 years in the market, when there has really been any certainty in the market. Uncertainty is part of life, and it certainly moves through the market. There's never an all-clear signal sounded. But we'd have to say, you know, our target is 4,400 for the S&P this year, based on what we've seen coming out of the box or out of the gate, so to speak, at the beginning of the year, a chance that we may see that exceeded. Right now, we'll stick with the 4,400. Our main concerns are on the day-to-day basis, you know, are the ability of the market to oversell as well as to overbuy in the near term. You have to curb enthusiasm somewhat. And keep a good business mind in terms of what you're investing in and your courage of your convictions.
Hey, John, great to catch up. The market certainly came your way in the first 6 weeks of this year. John Stolfus there of Oppenheimer on the latest. Looking ahead to CPI data tomorrow morning, then on to retail sales. And note after note this morning, over the weekend, through the last couple of weeks, the hard data is really strong. Vishy Tirupattur over at Morgan Stanley, dropping his position on treasuries, Tom.
Yep.
That overweight position on treasuries, gone. Dropping his short on the US dollar, gone. The idea being you can't ignore the hard data. We need some clarity on things like the terminal rate and the neutral rate, and it's reintroduced those questions again.
I'm glad you bring this up. There's 3 changes to Morgan Stanley, and I don't know, we mentioned this on Friday, John. Do they make their adjustments and tweaks out front of CPI and retail, or with a vengeance do we get a reset off that data later next week? I don't know which it is, but Morgan Stanley clearly decided to get out front.
The CPI will get all the attention this week, but I think we're both on the same page. Perhaps we all are, Lisa. The retail sales is going to be really interesting because the takeaway from a lot of people is this economy is far more resilient than we thought it was 12 months ago. And are we going to see any kind of cracks in things with the consumer, with regards to the consumer specifically in retail sales on Wednesday?
There were a number of surveys that came out, including the MasterCard consumer survey, consumer spending. There's also a Bank of America spending survey. The result, they're all spending tons. They are re-accelerate their purchasing. They've got purchasing power, and they're willing to use it. And it doesn't really speak to this slowdown or a real lack in momentum there.
Torsten Flock of Apollo pointed to the same thing over the weekend, Tom. No landing is something I've heard so much about in the last week. Loosely defined still, and we'll try and define that a little bit more clearly in the coming weeks.
I think there's 3 basic schools. There's rates are going higher. There's it's over, disinflation, and then we're back to this no landing, strange economy. Take your pick.
I think the price action has been more surprising this year than the economic data so far.
Best ad.
Just a rip-roaring rally.
Best ad.
Best ad? Best ad. The Caddyshack reference, easy.
That was good.
Well,
that was good.
I forget what beer it was, but you know that's not important, is it?
No, clearly.
The ad, mine was the ad agency of Gorman, Wilson, and Zetman.
Oh, you enjoyed that, did you?
They
nice.
They got to where, and then they moved back in. And
Futures.
they just Mullen, it was Mullen is the brilliant agency that did the E-Trade ads.
Unchanged on the S&P 500, futures unchanged. More still to come. Greg Valier of AGF, just around the corner.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. An International Monetary Fund mission is starting talks with Ukrainian officials today. This comes as the IMF weighs a multi-year aid package worth as much as $16 billion to provide a catalyst for more financial aid. On Friday, Russia launched its biggest barrage of missile attacks on Ukraine so far this year, as President Volodymyr Zelensky is seeking more weapons to fend off the invasion. Now, Bloomberg has learned the European Union is getting ready to slap Russia with another round of sanctions. The EU's executive arm will propose export measures aimed at heavy vehicles, including trucks and machines used in forestry and agricultural sectors, as well as possible import restrictions on Russian rubber and asphalt. The next package would be the EU's 10th set of sanctions against Russia. 3 flying objects have been downed over North America in as many days, with another reportedly spotted over a Chinese port city. U.S. fighter jets shot down objects over Alaska and Canada on Friday and Saturday, and another over Michigan yesterday, less than 10 days after a balloon was downed off the coast of Carolina. According to a Chinese news outlet, Beijing is preparing to down an unidentified object flying near the port city of Chengdu, a city home to a major naval facility. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg.
Politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. Only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg. Wall Street prepares for the latest read on inflation.
There's a huge amount of uncertainty out there.
We're going to get some lumpy numbers. Will annual rates continue to fall?
If we get a hotter print, how much does that really take some of the momentum out?
Instant reaction on Bloomberg Surveillance.
The data have come in stronger than expected.
Or are they literally making it up as they go?
Plus an exclusive interview with Richmond Fed President Thomas Barkin.
It just makes sense to steer more deliberately.
February 14th might have something to say about that.
Inflation in Focus, tomorrow on Bloomberg.
The CPI tomorrow, retail sales on Wednesday, ton of Fed speak in between. I'm sure you all can't wait. Equity futures on the S&P have 0.1%. Good morning to you. Particularly good morning stateside. I'm sure some of you are nursing a headache, maybe even a hangover. A severe one for Bramo. We'll nurse her through it for the next couple of hours. I know for all of us, we watched the first half, the halftime show, and then went to sleep.
We all watch it. No, come on. We all watch it differently. I got Afterthought giving me the Rihanna play-by-play, and then we have to watch Glee and Pitch Perfect and all that. John, you're actually trying to watch a football game.
Sure.
At Bramo's house, they put the game on mute when the ads come on.
They turn the volume up.
100%.
You're not alone. I think a lot of people do that.
I'm like, please stop talking. They're cheering for the game.
The week ahead is a big one. As I say, CPI tomorrow morning. Today, I'm going to allow Paul Donovan of UBS to talk about today. He says today's data calendar, and this is a direct quote, is a barren wasteland of nothingness. So quiet that even former Treasury Secretary Summers should find it difficult to justify offering media commentary. In the absence of data, the risk is that idle speculation takes over markets. Thank you to Sam Rowe for pointing out that quote. Tom on Twitter just moments ago.
It's going to be interesting, and to this, into all the different themes. And I'm not even sure where Professor Summers sits right now. Clearly, he was way out front in dismissing transitory, and, with Dudley Allarian, they were looking for some form of stagflation. But as we said in the last segment, we said, we got three views right now. That's the way it is.
I think that we should just have that as our promo. Today's data calendar is a barren wasteland of nothingness. Enjoy.
The consensus right now, Andrew Hollenhorst of Citi, I've got all these notes in front of me. Data reporting to a longer expansion. Mike Gapen of BFA. The economy is revealing itself as difficult to slow down. You see this again and again and again. Barclays, who think that the terminal rate now goes out to 550, said this in the last week. Incoming labour market data suggests the Fed has gained less traction against labour demand than expected. And so we keep seeing this again and again and again. And the real pushback, a couple of Fridays ago, 517 on payrolls, just blowing it out of the water.
And the people are still writing about that.
Absolutely.
Which I've never seen. That's
still going this morning.
That was. Can I just say, John, we did this in the data. The two-year yield migrates. 4.72 is your recent high in the two-year yield. And I'm sorry, we're getting there for 4.54%.
This morning, yeah. High of the year.
Yeah. What we're going to do now is on Washington and on the events of the weekend and the festivities. Greg Valliere is from New Hampshire. He, like I, was weaned on Ducks Unlimited. And if you're looking at canvasbacks or bluebills over Lake Huron this weekend, you had to be careful of the gunfire above you as you were duck hunting. Greg Valliere, would you help me here? What is above Lake Huron?
Not much. The vast wasteland that you referred to a few minutes ago, maybe. But there are military installations, to be serious, and there are places where espionage probably is fruitful for whoever's doing it. And that's brings us to this crisis. And I've got to say, Tom, it really strikes me that here in Washington, nobody knows. Nobody knows what these objects are, what the goal is. The lack of any certainty at all is unnerving.
What's interesting here in the humor of the barren wasteland or whatever's out there right now, Greg, what I would say of our knowledge of Washington is there's an entire intelligence community you bounce off that you're familiar with. Yep. Does our intelligence community know more, or do they know a lot more than we think?
I think they know a lot more. I always recommend David Ignatius in the Washington Post. He's great. He had a great column over the weekend about a new Cold War, about this area in space that is contested between the U.S. and China. So I think that this will further weaken our trade relations with Beijing. I think we've got months, if not quarters, to go before there's any improvement at all in trade.
What does an escalation look like with respect to this tit-for-tat with Balloon Gate or UFO Gate or whatever you want to call this?
Yeah, good question. Over the weekend, the White House enlisted 10 U.S. companies that we will now forbid doing any business with China. I think there may be more of that. The idea that the Trump-era trade sanctions could be lifted is zero, and there might even be more sanctions, new sanctions.
Do you think that TikTok could get banned? Is this more credible now after the escalation?
Yeah, and one of the players to watch, as you know, is Chuck Schumer, who's always been quite bearish, quite hawkish about China. And he said on one of the talk shows yesterday that he's considering it. I think Congress is giving this a very careful look.
Greg, help us with the Republican Derby. I believe it starts this weekend with a gentle lady from the Carolinas, but it begins, doesn't it?
Here we go, just a year and 8 months before the next election. But Nikki Haley, who is quite good, I've seen her in action. She's She's quick, she's smart, she's funny, she's charming, and she's young. And this is really important, I think, Tom. She's 51. DeSantis is 44. And I think this begins a new era of younger candidates running for office.
Where does that leave the president, Greg?
Yeah, they couldn't be much older. That's right. That's right, John. But I do think this is going to be a new theme, younger candidates with a new agenda. And I think she will have lots of company in the next 2 or 3 months. Mike Pence, Mike Pompeo, maybe the governor of New Hampshire, maybe the governor of Maryland. So the field's going to get a lot bigger over the next few weeks.
Greg, we've spent a lot of time thinking about the Republican field. Let's just focus on the current president of the United States. Greg, when are you expecting some kind of official announcement from him?
Oh, I think it comes later rather than sooner, John. I think it'll be, April, May, even June. I don't think he's in any rush at all. The suspense gives him a little bit of, talking points, but I think it's at least weeks, maybe months away.
Is that a matter of the calendar, Greg, just the calendar, or is it something else? What's it dependent on?
The calendar is part of it. I think maybe he doesn't want to have all the scrutiny this soon. I think he'd rather wait. I mean, obviously, he's 80 years old. I thought he did a great job last week in the State of the Union address, but I just think he wants to keep the suspense building.
Greg Valliere of AGF, the suspense is building. What is it, a year and 8 months away, Tom? The suspense will keep building. We're going to keep on doing this again and again and again.
I think the British way is.
I know you seem to prefer that, right?
It's just ridiculous.
Based on your comments, I think you do too. You're like, wow, the suspense is building. It's going to keep building.
I have to admit, on the Republican side, that field is getting so big with some really, really big names.
Yes, here's the challenge for the Republicans. They end up tearing each other out. I mean, basically the circular firing squad. At what point does this really diminish some of the energy behind the Republican candidate, or could they coalesce behind a younger, more charismatic candidate that actually does gain some groundswell, even with more moderate Republicans?
There was a Reagan method here that I will suggest Ronald Reagan invented. Somebody can correct me on that. And the idea is you run to the polarity and then you move to the middle as you migrate towards the first Tuesday of November. That's evaporated. It's gone.
The opposite now.
And I don't even know where Ms. Haley fits into this in terms of you're in the middle. And you got to go out and win the primary, and I'll pick on Kansas, but pick another state. And Kansas they won the Super Bowl, so Missouri, Kansas. I don't know which Kansas City won, but did you know there's two Kansas
City is slap bang in the middle of the
There's two, and I never got them right.
I'm aware.
Is it Missouri? Is the Super Bowl?
The Super Bowl. Go on, no, complete the sentence. Keep digging. This is great.
Kansas.
I like how you're trying to reveal.
There's Kansas City, Kansas.
My knowledge of geography in America,
John,
but you're actually revealing your lack of knowledge.
No, my lack of knowledge is off the chart.
I'm not going to jump in and save this. Please keep going.
Is it Kansas City, Kansas, or Kansas? I think it's Kansas City, Missouri won the Super Bowl.
Yeah, that's great.
Did I nail that?
No, I got no idea.
Okay.
I thought this was about.
Did I nail that? Thank you. Amy tells me I nailed that.
Great. That's
Absolutely
good.
nailed that.
Have you ever been?
Yes, a couple times.
Nice. You just didn't know where you were.
Been to Lawrenceville. Been to Lawrenceville.
Do you prefer Missouri barbecue or South barbecue?
Don't know the difference. Although we had barbecue last night.
Oh, true story. I passed an Atomic Wings, and it looked like a convention of delivery service people.
Just bikes outside.
Literally completely packed the sidewalk, and the inside was completely packed with people.
I started the morning with Dunkin' Donuts after that ad.
That I believe. That I believe. Ben Affleck was selling donuts.
I came in and one of my interns
was it him or J-Lo? What got it done
J-Lo.
for you?
No, J-Lo did it.
Nice.
I said to one of my interns, they go, what do you want? I go, I want a glaze. I want a glaze.
Connection lost.
life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Equities trying to bounce on the S&P 500. Good morning to you. Futures up by almost 0.1%. On the Nasdaq, up 0.4%. On the S&P, worst week of the year, down about 1% last week. The scale of that tells you more about the year than perhaps the week. We've had a massive year to date, especially for the Nasdaq. In the bond market, 2s, 10s and 30s. Tom pointed it out. Your 2-year, very close to the highs of the year. 454 a little bit earlier this morning. Up a basis point right now, Tom. 453.23.
Is that to me, that's the arch point. I mean, of all the data on the screen, John, there's 70, 85 data points. To me, the 2-year U.S. yield is the one with the most information.
2-year, 10-year, negative 80 basis points. Mentioned this a little bit earlier if you missed it. Morgan Stanley, Vishit Rupator, dropping their overweight on treasuries, dropping their dollar short as well. Euro dollar looks like this on euro dollar right now. We are at 106, I think that is, with my eyesight, 106.77, unchanged on euro dollar. The pushback from Vishy, Lisa, is pretty clear. Ultimately, the strong data has reintroduced the question of last year. Where's the terminal rate? Where's neutral? And is it much higher than where we are?
This is the reason why the preeminent risk right now is, will there be some sort of central bank policy error? Will they tighten into recession? Not necessarily whether there's going to be some sort of global recession caused by underlying weakness. And that really does raise a question. What does it mean to not fight the Fed if the Fed is looking at the data and fighting inflation?
Well, this week, Tom, not just about inflation, about retail sales as well on Wednesday.
It is, and that falls into the GDP call, which gets us right back to a very delayed recession call. Right now, joining us, and we decided the day after the Super Bowl, we needed to speak to somebody who was awake. Anthony Crescenzi is a New York Giants fan. It's well understood the New York Giants fans did not care about the Super Bowl, so we're thrilled the gentleman from Staten Island could join us this morning. He has a nodding acquaintance with PIMCO. I want to talk about the 2-year yield. You've got 1,042 pages, 4th edition Steichen. You have to talk to Jerome Schneider at PIMCO. What is the collar you have on the 2-year yield? What are the set of outcomes on the 2-year?
A lot of it depends on what you think the neutral rate for the federal funds is, meaning where is it that the Fed's policy neither stimulates the economy or weakens it. And if you think the neutral rate is where it was in the 2010s, somewhere extraordinarily low, between 0.5% above the inflation rate, then perhaps the 2-year yield should be a little lower. But if you think that that's gravitating upward for various reasons, perhaps related to all these costs, related to resilience efforts on defense and energy, et cetera, and scarcity of labor, then perhaps it's moving upward, and that in the next cycle, rather than the funds rate, which is expected to be around 5% soon, in the next cycle, when the Fed funds rate moves lower, maybe that'll go down to 2 instead of 0. And that'll put the 2-year somewhere in the 2s. And so it's this 4.5% yield. You don't want to catch a falling knife, but you want to catch it while you can. And you should have faith in the Fed, as Lisa said. Don't want to fight the Fed. Don't fight the Fed a year ago had a very negative connotation. It meant run for the exits.
That was a Crescenzi load the boat. I think
that was pick up.
But today,
pick
don't
up
fight
the
the Fed
coupon
means
available
having
to
some
you.
confidence.
So are you saying this is a once in a 2-year, 5-year, 10-year opportunity to pick up 4.5% at the front end?
Well, the yields today look quite attractive versus a few metrics. Number one, versus history. And we'll use the Bloomberg aggregate, the old Lehman index, as a guide. The yield today is in the mid-4s, 4.5% in the Bloomberg aggregates, a compilation of treasuries and mortgages and corporates, etc. That's very good relative to history. Secondly, it looks good relative, and this is very subjective, inflation. If you think the inflation rate is headed downward because you have faith in the Fed, and I would, has a tremendous power to bring the inflation rate lower, then it's quite attractive versus the future inflation rate, which the bond market's pricing for, which is somewhere in the low 2s. So the real interest rate, the prospective, the future real interest rate, if you believe the inflation rate's headed downward, looks very attractive. And finally, it looks good versus normal volatility for the bond market. And we can't use 2022 as the comparison. 2022 is probably the anomaly. It was a reversal of $19 trillion of negative yielding bonds. And who for a generation will buy a German Bund again at minus 50 basis points? For a generation, investors will remember what happened. So I'd say have faith in the Fed. This central bank is headed to central bank heaven. It's following the lessons of history, which has, as Chair Powell said in August, include three lessons. Number one, take responsibility. Secondly, pay attention to how people feel about it, inflation expectations. And finally, quoting Paul Volcker, the legendary Fed chair, keep at it. It's a quotation, of course, from the book Keeping at It by Paul Volcker. Keeping at it, this persistence, this tough love is what will bring down the inflation rate, making those yields today look quite attractive relative to that.
Central bank heaven. I love that idea, by the way.
Because only hawks go to central bank heaven.
I mean,
that's the expression.
I'm just, really
hawks.
trying to wrap my head around what that would look like. What happens if this Federal Reserve is facing a keep at it kind of Volcker moment? How high could rates end up going? And why is it still valuable to go into 2-year treasuries at 4.5%?
Well, again, confidence in the Fed is one of the central pieces of this this idea, this notion of owning securities today. But how high the Fed needs to go, one need to take a simple back-of-the-envelope calculation of where how the story looks. You take the wage figure, subtract productivity, and you likely get the future inflation rate. Lately, the wage figure is in the mid-4s, whereas productivity's trend rate's about 1.5. So it looks like the inflation rate's headed to 3 based on that metric. But if you believe recent data, it looks like wages are slowing even more. It does seem as if potentially it's headed to 4% wage growth minus productivity 1.5, and you get a future 2.5% inflation rate. That, along with the bond market's confidence expressed in TIPS, inflation-protected securities, the 5-year, 5-year, all things like that, all seem to suggest quite clearly the inflation rate will head downward. So how high does the Fed need go? It needn't go too high, in part because of the confidence it's instilling in investors and the public.
So basically you're saying load the boat in so many words, or you don't want to catch a falling knife, but you also don't want to miss it on the short end. What about the long end at a time where 3.7% yields on a 10-year might look really attractive if you believe in the Fed's ability to bring down inflation?
So the PIMCO view is that the 10-year yield will be in a range of 3.25% to 4.25%. So it's pretty much in the middle of that. But you have to think it is a decision point for investors, several parts of the decision point. One includes how much volatility one expects, and we would expect interest rate volatility to plunge this year relative to last year because the forecast miss on the federal funds rate is likely to be a lot lower. Even if it does have to go higher, the funds rate, it won't have the miss won't be last year's 4-point miss on the funds rate. The second part of this decision point is how much dry powder do you want in terms of tracking error, cash? We'd say have a little bit more. But the third one is simply based on diversification. Do you really want a market time diversifier? We'd say it's a dangerous thing in the long run.
In the vicinity of page 1017 of your Steigums, you talk about what corporations do. What will be the behavior of corporate issuance out of this pandemic?
It should go lower, of course, and it is going a bit lower. And you certainly in the lower you go in the capital structure, the less likely, and of course in terms of credit rating, the less likely it is that the issuer will be interested because the math simply won't work out.
The math doesn't work.
The math doesn't work, and that's why when interest rates go up historically, it's a decision between saving or investing for the investor. And investors will decide to save unless they feel there's a good reason to invest.
Does that increase the convexity, the acceleration, the gyration, the jumble of the market, particularly as you go out duration?
The technical forces in the bond market are something to be very careful about, especially in the corporate.
We haven't been for 17 years, or whatever it is.
It's specifically since the GFC. The principal agent model is busted. The amount of, according to Federal Reserve data, the amount of corporate bonds held by primary dealers, the intermediaries in the bond market, is only about $7 billion, $5 billion. Now, in 2007, pre-GFC, it was $300 billion. This is a market that's doubled in size. And so good luck finding a bid and offer on even a few $1 million of corporate bonds on any given day, which could mean the implied default rate could jump massively, even if the risk of default doesn't.
Which raises the specter of an accident, a financial market accident. And this is something that some people are concerned about, and others are sort of basically putting out of the picture because we've raised rates so much and haven't gotten one.
Right, short-term sort of issues that the markets work their way through, because it's, there's a buyer for anything. It's just a matter of price. And so even if there's dislocation, you'd find buyers eventually. But in 2021, quick example, the implied default rate on a BBB rated security went to 10 to 20%. Now, a BBB rated security, according to Moody's, historically has a 0.1% default rate. So meaning you have a 99.9% chance of getting your money back. But bond investors said you have an 85% chance of getting your money back. And that proved to be wrong. But it was because of liquidity and that market accident sort of thing. But it did sort itself out, of course, and we didn't have high default rates, et cetera, et cetera. The market finds its way. But there is something to be worried about. And it's not a worry necessarily. It could be an opportunity. Leaving dry powder for dislocation is a good idea today, because you could have those sorts of dislocations in a recession and in times of stress.
Tony, let's wrap it up. Final question. If we get an upside surprise on CPI tomorrow, same thing on retail sales, you a buyer of any backup in yields in treasuries?
The more I've gave a range. We can go into detail as to why we have that range, but it makes sense because you could see, even after the mammoth gain, as you noted, in the payroll number last month, the bond market's still been pretty steady. Even the 10-year for near 6 months has hardly budged.
Yeah.
The confidence in the future and the outlook is quite high, and so you could see as if the market wants to, and I hate that idea, wants to go higher in price, and so you'd probably want to consider owning securities on the way down.
That's the message from PIMCO here, Tom. Clearly, buy bonds in 2023. Tony, thank you. As always, Tony Crescenzi of PIMCO going into CPI and retail sales this week.
Yeah, to me, it's Ambiguity Monday. There's 3 basic scenarios out there on inflation, and all of that is a guesstimate of the bond market. And then you fold it into the equity market. And I mean, we're already getting a hate mail on John Stolfus here. People are shocked at his optimism. Oh, really? Oh, yeah. You know, I think it's a jumble, and to the Morgan Stanley view, do you reset now, as clearly fixed income Morgan Stanley's decided, or do you wait until Wednesday morning at 8:32?
You might have heard a ping on my Bloomberg. It was Chris Harvey of Wells Fargo. Mentioned him at the top of the program, how the bear market is over. He said this: when I was on the show earlier this month, there were comments about whether you should sell this bear market rally. I kept thinking that doesn't feel like the right question. The question that kept popping into my head was, is this still a bear market? He doesn't think it is. But there is one important note here that he wants to make. And luckily, it doesn't mean we're looking at a great bull market either. More or less, it's just a market. I don't think he's thinking we're going to get some massive rally. He just doesn't think we're going to get some massive sell-off either.
Well, it goes to this point of the diminished volatility in interest rates, that basically we're going back to price discovery in a way that we haven't really experienced for a very long time. The fact that the Tony Crescenzis of the world are saving a bit of dry powder just in case there is a dislocation highlights we may not get that dislocation, because a lot of other people are doing the same thing.
5%. Isn't that like 5 to 10% hold cash?
I mean, that's what we heard, yeah.
Rick Reeder had a lot of cash over at BlackRock, and that's slowly been just chopped away at as we've started the year.
But there still is enough cash out there that people are looking at the likelihood of a
dislocation.
dislocation.
Like my bow tie with the Kansas City colors? It's the only one I could find. It's got a little bit of Kansas City.
Was that
going.
deliberate? Have you just changed that? I didn't even notice
sensitive,
that.
You know.
Okay. Did you find that this morning? What is it?
Buried.
What's on it?
I don't know.
I can't tell.
It's a British thing. It's a British thing.
That's a British thing.
Yeah, it's posh.
Okay. British, but also Kansas City.
Yeah, posh.
So
posh
I should be
Kansas
apologising.
City.
I'm sorry.
Obviously. That always is the takeaway.
Yeah, I'm not sure what I think of that. All right. Jordan Rochester of Nomura coming up. Futures positive, a tenth of 1%.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. OPEC's top official is urging countries to invest much more in oil to meet the world's future energy needs. The Secretary General of the Organization of Petroleum Exporting Countries says climate policies need to be more balanced and fair, and policymakers need to look at the big picture. Now, Goldman Sachs CEO David Solomon is reported to have said that he should have acted sooner to cut jobs. The FT says he told a private meeting predicting that the layoffs would have been less drastic had he reacted when signs of a slowdown began to emerge. In the second quarter of last year, Goldman is slashing 6.5% of its headcounts, one of the largest rounds of job reductions ever. The Kansas City Chiefs did beat the Philadelphia Eagles 38-35 in the Super Bowl. Patrick Mahomes helped deliver the win with an injured ankle. The quarterback threw 2 touchdown passes in the fourth quarter and ran 26 yards before Harrison Butker kicked a field goal with 8 seconds left, leading the cities to victory. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg.
Seeds, typically between the time you start and they get out in the farmers' fields, is about 8 years. Now we have a pipeline of innovations. We've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This is Bloomberg.
Find it hard to imagine a world where the US is in disinflation, as we're pricing at the moment, and Japan is seeing aggressive inflation that would require much higher rates. It's not a world that adds up. The big change going on at the moment is not what's happening in Japan, but what's happened in the rest of the world.
And the data's picking up in the rest of the world. That was Elsa Linhos there of RBC from New York City. Good morning to you. Equity futures on the S&P look like this, just about turning positive by 0.1% on the S&P 500. Yields 373 on a 10-year. And do we have to get comfortable with a 2-year north of 450? Here we go right now, Tom. Back to 453, up a basis point. And earlier on this morning, 454.
210 spread, negative 81 basis points. Fascinating to see if we get what Priam is. And I heard Jersey many weeks ago saying he has a theoretical construction where you can break down from negative 80 basis points down to negative, dare I say, a full percentage point difference, 100 basis points between a higher 2-year and a lower 10-year. We're not there
There's
yet.
a couple of ways to resolve that inverted yield curve. One is you get an aggressive sell-off for the long end, renewed hopes about growth, maybe a reintroduction of inflation risk, perhaps, Lisa, or you get the bull steepener you get when the Fed comes in and starts cutting interest rates aggressively.
Which raises this issue, is the yield curve wrong this time? is it historically not necessarily as much of a predictor of recession, of some sort of downturn as it has been in the past? Do we get the Fed cutting rates without a recession, without a downturn in this soft landing type of situation? And then what does that say for this indicator going forward as a predictor?
You know what is consistent about this indicator is that we have that conversation every time it's inverted. Every single time. It's
You're
like,
welcome.
perhaps
You're
it's
welcome,
different this time. I'm not saying you take that view, you're just framing the debate, but ultimately that's a debate we have every single time.
Which, you know, again, no one wants to say this time is different. It's the worst words you could say in the financial industry. At the same time, it does feel like perhaps there is a different kind of distortion here. At least that is what the market believes right now, because the immaculate disinflation debate is very much in the zeitgeist, in the forefront.
Tom, it's different this time. There you go. I'm not
Is
saying
that the
that.
headline?
I'm not saying
exclusive?
that. I'm not saying that at all. Not at all.
Coming up for the next 4 days, Ken Rogoff and Carmen Reinhart to tell us it's different this time. Let's do this right now. I want to look through the prism of economics through the dollar market, foreign exchange, and he is G10 foreign exchange strategist for Nomura of Japan, of London, of New York. Jordan Rochester joins us this morning. Jordan, you wrote a short paragraph. I don't want to spend a lot of time on this, but we're beginning to see over the weekend new discussion about what I'm going to call the shock appointment in the Bank of Japan of something which for the Japanese is foreign, but for us is completely normal. How dare they put a real card-carrying economist and monetary theorist in with the Bank of Japan? I mean, that's not the way it goes. Mr. Ueda very clearly here is a different cut. What will that mean for yen? What does it mean for dollar?
Well, I think what it means is when the market gets too consensus on a particular candidate, it tends to get it wrong. And that's what seems to have happened. We still don't have the official confirmation, so we have to wait and see. But when it comes to Ueda, in terms of his policy choices in the past, as he was on part of the BOJ panel in the past, he did vote against raising rates many years ago. But he's written a lot more since, and that was many, many moons ago too, so his opinion might have changed. So in answer to your question, Tom, what it means is uncertainty. We don't know where things will go. A new governor tends to lead to changes at the Bank of Japan, just like when Kuroda came in, we saw big easing. Could it be different this time? And I think one of the comments your previous guests had about Japanese inflation rising whilst we have disinflation elsewhere, I think what we're really talking about is differences in lags. So Japan was very lagged to this inflation cycle. It's now hitting the peak of that inflation. The highs of inflation keep coming. And that's why it's a more interesting story for markets here compared to where we were last year.
Radio and television listeners and viewers in the West, Jordan, are like, okay, cut to the chase, Tom. What's the so what here? We have Japanese data coming out, I believe, this evening, our time, including key GDP data, a key deflator series, which is that new inflation in Japan. What's the so what for the West?
Well, the so what is since the 90s, Japan's not really had particularly strong inflation. And on the wage side as well, we've had a few months here or there over the past 30 years, but we've not seen Japan be able to escape deflation or disinflation. This is potentially that moment where Japan has so much supply